that it's expiry today.
Yeah, but what a day, right? We have the expiry.
It's beautiful weather, I agree.
No, but even from a market perspective, Asia is soft. We have the SEBI board meet today. Maybe there could be some nervousness around what could happen to derivative regulations. There is the expiry, of course, today. And it's a day with some very, very heavy news flow. Some exclusives
and large caps
and some
as
otherwise.
well. Yes, I think large caps will be the ones in focus this morning.
So we have a very tightly packed show for you today. So let's get right to it. Just a heads up about our special focus at 8:15 on what's happening with cement stocks and exclusive story on India Cement. So stay tuned for that. But first, let me take you through what the global cues are looking like. So US indices were up in the green. Trade was sluggish, though, I would say consolidated, range-bound, holding pattern, whatever you want to call it. So nothing great there. But Amazon in focus. The mega cap hit an all-time high, has now breached the $2 trillion mark in market cap. So that's the big one. Excitement around NVIDIA as well, because their investor meeting saw the management talk about how they are streets ahead of any kind of competition. That's interesting to note. Their very famous CEO has got a 60% pay hike over the last year. That was another data point which I thought was interesting. Of course, he deserves it. Perhaps look at what's happened with NVIDIA. Weekly jobs claims are going to be in focus. That comes out in Thursday's trade in the US. Home sales data will be also looked at. Bond yields, though, have inched higher. A couple of Fed officials coming and talking about how they would want to wait for clearer data before rate cuts. The same narrative, but bond yields did inch slightly higher. The 10-year was at 4.33%. And crude, if I look at crude, and we'll pull up the rates over there, crude has, remember, been, really range-bound and not really moving too much, but now has slid on some fears of slow US demand. And there you're seeing the NYMEX prices there down about 0.5%. Asia is opened lower, and this is the big one. Japan's yen hit a 38-year low to the dollar. The question is now whether the central bank comes and intervenes like it did a few months ago. So the Nikkei down about 1%. In fact, all of Asia has opened down in the red. We'll pull up the implied open for the Nifty as well, which is also showing that we could see an opening in the red after, the spectacular run-up that we've seen last couple of days. I'll just pull up fund flows because yesterday was truly interesting, and it was the domestic investors who were buying. 5,104 crores. This is more volumes than we've seen in the last few days, while FIs were selling about 3,535 crores. So, that's where we're set up in terms of global cues and fund flows. But I reckon, I think, Dinesh, the one thing I'd pick up from what you said right in the opening is the SEBI board meet. And that has been one persistent concern, that there's going to be some whip cracked on derivatives trading. We don't know exactly what.
Yeah, we don't know what. And frankly, difficult to speculate. I've got 3 different versions of how mild or how strict and something in between there. So who knows, frankly. But if it is, the thing to point out is that this will not be the end date. They'll float a consultation paper. There will be some views gauged, etc. and stuff like that. But yes, the announcements, if any, could stir a hornet's nest too. Who knows? So that is something to keep a keen eye out for.
And there's a lot more apart from just derivatives, right? They are looking to tweak AIF valuations, investment advisory norms. So going beyond derivatives, I think the board meet will carry a lot more meat beyond that. So while I think the derivative segment is critical, I think it also comes from a good place, guys, and we've got to be mindful of that. The participation by retail investors or traders has been so significant that this may not be such a bad thing after all.
So the bitter pill is always required, but no one likes swallowing it.
And we are assuming that there could be major changes coming. We still have
maybe
no
not in this board
on
meet,
this.
not in this board meet, could be in the budget, but at some point or the other, the penny will drop. But that's just one of the many things.
Yeah, just that pointless speculating over it, but like we said, multiple versions heard. Let's see if that has a whipsaw effect on any of the specific entities. But from a market-wide perspective, aside of the SEBI meet, and that remains an overhang, the momentum has persisted on key indices, and I think it's become very difficult for people to call tops, because all calling of the tops, even from 23,500, has failed miserably because banks are participating. Look at the options activity on the Bank Nifty yesterday. The 52,900 strike saw maximum put writing as well as has the maximum OI as well. And that therefore becomes a critical, you could argue, a support for the Bank Nifty as well. And frankly, if the banks manage to do well, it's very difficult for the Nifty to have a very sharp pull back, because autos and metals can only drag you down so much when IT is flattish and banks are actually doing well. So that remains a key thing to watch out for. The other thing that I picked up is I spoke to 2 or 3 very large investors, because I got a sense that while FI long short continues to be positive, the large HNI investors, smart money sitting out of Mumbai, at least the ones that I spoke to were the Mumbai guys yesterday, they are participating in blocks in a very large way. So bottom-up buying is happening. But on trading positions, market-wide, they have become a bit lighter in the last 2 or 3 sessions. And these are marquee names who've turned light. So, well, you've got to give credence there. But let's see. FIs have gotten it right thus far. 13 straight days of building up long positions. Let's see if that lasts. And you don't need me or Tamanna or Samina to tell this to you, but telecom has a momentum of its own. Let's see if it lasts today. But yesterday was a blowout day for telecom, with almost everything participating, and the stocks are in a momentum zone which looks very, very difficult to shake up. Now, is there news that follows these? Remains to be seen, but watch out for this.
Yeah. We'll talk about the spectrum details as well, but yeah, that's the big story on telecom.
It is indeed, but while of course I think Neeraj is sounding a little more conservative this morning, we're only about 130, 140 points away from 24,000. So towards the second half of trade, if Europe doesn't see too much selling this afternoon, it genuinely wouldn't surprise me if we see 24,000 on the index. And like you said, Bank Nifty has been the shining star. Barring HDFC Bank, that was the only one that didn't participate from the private sector banks yesterday. Most of the banks, including PSU banks, have actually had a good run. Watch out for HDFC. It ended flat. Of course, hasn't done as well as the likes of an ICICI Bank or any of those other PSU names in yesterday's day of trade. You also had Reliance doing a little bit of management in terms of gains on the index. So it had a good run in trade, 4.5% on Reliance Industries after many, many weeks and months of underperformance. So those were the few factors that stood out for us. The VIX continues to remain elevated, and the Nifty, remember, has gained significantly over the last 6 months. It's come in slow and steady. Of course, we all remember what happened on the day of the election and what's followed through from there. So if you've been on the sidelines, very likely that you're not very pleased with the recent up move in the markets. But like Neeraj indicated, trading money may be taking a little bit of a breather in terms of big investors in India. Well, a quick check on what's happening. And of course, a quick mention, you've got that bond inclusion that's lined up tomorrow as well. So the bond market and the dollar rupee pair will be in focus. So just for a day, we may shift focus from equities to debt in tomorrow's trade. So we'll talk about that in more detail later on. But it's been a season of block deals, and it continues to remain so. We've got a few stocks in today's day of trade. Yesterday, of course, you had the likes of Vedanta that sold off substantially. You had promoters from CE Infosystems, Happy's Minds, who've sold out stake. This morning, there are reports that Archean Chemicals, remember, this one has done quite well in the last, it's probably been one of those few chemical names that has gone up recently in terms of activity. It's probably the only one that has seen some buying, but it remains an expensive counter. There are reports that 10% of a block could be expected to be sold in early minutes of trade. India Resurgence Fund, Piramal likely, which is likely to sell 10.13% for about 818.7 crores. Now, whether this gets lapped up by the promoters or by other funds is something we will have to wait and watch. We are trying to track down more information on this one, but for now, Archean is one you want to track in terms of a pretty big block deal coming out from a fund on Archean. Apart from that, CSB Bank, another block deal there. You've got FIH Mauritius, which is looking to sell about 9.72% stake for about 595 crores. The floor price is at a 1% discount. They own a significant chunk in CSB Bank. They're looking to offload about 9%, largely to use that to fund expansion, is what we believe the sources are saying. So watch out for CSB as well. The third one, which is not a block deal this morning, is PI Industries. It's about an acquisition. They've gone and acquired a pretty big one, in fact, for about £32.78 million, and this is a European acquisition. So there is expected to be some movement around the counter around the plant healthcare organization that PI Industries has gone out and done.
Yeah. So, all right, some that are on my radar, and we spoke briefly about telecom, but let's just give you a summary of what happened, because the auction for telecom spectrum concluded yesterday. It actually shut early, just in a couple of days, and one of the reasons for that is that the demand wasn't too much. So player-wise summary of who got what. Bharti Airtel has got 97 megahertz. They bid about 6,857 crores. Vodafone Idea got 50 megahertz, has bid 3,510 crores. And Reliance Jio, the largest player, one of the two largest players, has got about 14.4 megahertz and bid 974 crores. So that also, in a sense, explains why you had a lukewarm kind of a demand. Vodafone Idea has bid for the 900 megahertz band. They've renewed UP, West Bengal, and the west of UP, enhanced Andhra, Tamil Nadu, Karnataka, Punjab, Rajasthan, Kolkata, and entered for the first time in Andhra and Tamil Nadu. Likewise for Bharti, they've renewed their spectrum, which was expiring in 2024, along with additional spectrum that they have added on. Bharti Hexacom has acquired 15 megahertz with an outlay of 1,001 crores, while Reliance Jio acquired additional spectrum in 1800 megahertz band in Bihar and West Bengal. But the reason to watch some of these stocks is what is being expected, that now that the spectrum auction is out of the way, do you have the trigger, or are you laying the ground for those much awaited tariff hikes? I reckon that's what the street is betting on today. Will that trade continue? Remains to be seen. You might see some sort of a cool off if there's no clear trigger, because nothing massive coming from the spectrum auction. Only one thing noteworthy, perhaps, that relatively Vodafone Idea has been more aggressive than what was widely expected. So that could be seen as a plus point for a stock which has anyway been running up. Sona BLW is the other one. Auto Anks in focus, the EV play in focus, and this announcement by Sona BLW only enhances that. So what's happened is that they've received certification for traction motors for electric two-wheelers under the PLI Auto scheme, and for three-wheelers as well. So for two-wheelers and three-wheelers, fewer players who have this kind of certification under PLI for traction motors. It's a big play for their electric vehicle plans. And for Sona BLW, what they've said in the previous con calls, as my colleague Puneet also pointed out, is that this puts them in a very attractive position as far as clients outside India are also concerned. So global players could also be interested with these capacities that they're building up. For Sona BLW, that's good news. We'll see how the stock reacts. Dr. Reddy's is the other one in news. So they will be buying Halion's anti-smoking portfolio. So a big one there. They will be acquiring a nicotine replacement therapy brand for about 500 million pounds. They will be shelling out 458 million pounds up front. The performance-based contingent payment is of 42 million. Now, there are two interesting and varied takes on this. So while Jefferies is not very excited about this acquisition, they've retained an underperform and a target of 50-10 on the stock. You have Nomura, which is quite upbeat and has a target of 6499 on the stock. So while Jefferies is not so excited about this, says that nicotine therapy brands' growth is stagnant. They will require upfront investments, and synergies in the portfolio will only come in FY 27-28, while DRL, of course, expects the deal to be margin accretive. Nomura, meanwhile, says the acquisition is unlikely to be value destructive, and they're not convinced on the strategic rationale for a global consumer health presence. They would have preferred a company focusing on select countries to build consumer business, but nevertheless they have a more upbeat view. I don't know about a nicotine product, and if it really works. If any country at all, perhaps in India, where you have large number of smokers,
or Italy,
or Italy, but from what I've heard from people who've used these products to stop smoking, it never lasts. They never use them for long, and it's just a bad experience. They always go back. So I don't know.
Yeah. And I'm sure Neeraj doesn't either.
I don't know. Now, IIFL has also been on the negative side. They are saying that this they have used the they view the deal as inefficient use of capital.
Yeah.
So could
why
be
would you
interesting.
go out and buy a brand that is an anti-nicotine brand when you could have invested in other things? So Dr. Reddy's might see a bit of a hit. Net.
Yeah.
That's the takeaway.
Yeah, could be interesting to see. By the way, speaking of global deals and etc., there is a Reuters note which says that Bosch Global is weighing an offer for Whirlpool, the global parent of Whirlpool India. And usually when some things like these happen, it tends to bring about excitement in the subsidiaries as well. So let's wait and watch if Whirlpool India were to react today. It's for its price and for the MNC factor that it has, it's a fairly liquid stock as well. Let's wait and watch on a number of days. So let's see if Whirlpool India has a bit of an uptick in the session today. Indus Tower doesn't need any momentum, but is going to be included in the Nifty Momentum 50 index from today. Watch out for this one, 3.5% up yesterday as well, while it was in the F&O band, so could be interesting to watch. And the third one on my list is Navin Fluorine, a new MD now going to consider fundraising in its board meet on June 29th. Could be interesting to see if Navin Fluorine has a bit of a reaction in the session today. So watch out for these three, the first three on my radar.
Just a few more. SJVN is one that I would talk about perhaps. They've signed an MOU with AM Ammonia. It's developing one of the world's largest green ammonia platforms. They will be developed in 2 phases, starting with a capacity of 1 MPTA. So SJVN is one I would watch out for. Titagarh and RVNL was the other pair, because you've seen real stocks really respond. So in RVNL's case, their joint venture between KRDCL and RVNL has received an LOA from Southern Railways, 156 crore orders, so nothing massive. But you've seen real stocks perform fairly well. And Titagarh is the other one. Now, Titagarh's promoter is pairing stake for 438 crores. Look at how that stock performed yesterday, and in the closing session was completely zooming. If you pull up the intraday chart as well, it was 9% up. So Rashmi Chaudhary has offloaded 26.93 lakh shares or that's about little less than 2% of equity. BlackRock Global Funds brought 21.73 lakh shares. So those details are out, and BNP Paribas mopped up 5.2 lakh shares. So Titagarh already had its run up. Watch out for any further up move if there is. Quite a few others that are also buzzing today. Anything that you want to add?
Yeah, I think just a quick one, talking about order wins. EMS also could be seeing some traction in trade. Today they've won an order to the tune of 119 crores through the JV. They own about 26% in the JV, and they've got 2 other JV partners. But those aren't listed, so you will see a reaction on EMS on back of that order win. Apart from that, Ramke Infrastructure, they've also got an order, but not too significant. It's nevertheless 130 crores for a project in Ladakh. So that's pretty much what we have. Supreme Industries, small company, a 55 crore order win on Supreme Industries. That's what we have, but I think the biggest talking point in the market has been...
Yeah, just before cement though, Samina, one more stock which saw a very interesting deal or block was Newland. Because while small cap World Fund bought 1.3 lakh shares, the seller is Malabar India. And Sumit Nagar of Malabar India is a very astute specialty chemical pharma investor amongst other things, and a small cap investor. He having sold 1.3 lakh shares, it's small 1%, but could bring about a reaction in Newland, so that's to be watched out for.
Yeah, so we will watch this one in trade. But apart from that, a few other names that you have is, of course, the Supreme Industries as well, that I said, 55 crore order win on that one. ITD cementation was yesterday. You've got some SME listings as well that we'll talk about. But I think, guys, the big talking point on the street yesterday was cement. The rally came out of nowhere. And especially in terms of timing, monsoon is not usually a time when you see cement stocks do well.
It was one stock, wasn't it?
It was
largely one stock.
Well, it was India Cement, but you also had some news on Ultratech. You had JK Lakshmi. The whole pack did gain on relatively large volume. So while India Cement led from the front, it was not just India Cement. The gains were across the board, and even in the range of 2 to 15%. Volumes were large. With India Cement, it was 5x the volumes, but the rest of the sector also saw gains coming on large volumes. Raw material prices have also eased for the sector. Demand uptick is what's expected. But of course, like we said, India Cement is the one that everyone was talking about.
Yeah. So KT Jagannathan is joining us now for more on an exclusive story that he's written actually on the NDTV Profit website, and let me bring him in to talk about what the promoters are doing, because at the end of the day, a lot of rumors doing the rounds about N. Srinivasan, what the family wants to do with India Cements. Do they want to exit or not? In fact, I'll leave it to you, Katie, to take us through what those exclusive details are from sources and give us a sense of what's buzzing in India Cements.
See, good morning. The thing is that, out of the blue, the stock prices of India Cements went up by nearly 15% yesterday, in the sense, a lot of trading volume there, See, the issue here is that, the promoters hold little around 25-26%, and then the Damanis hold a little over 20% there. The Damanis have been holding this India Cements share for a long while now. But the speculation always that, what will happen, if they want to sell it or if they want to demand whatever to control something or other. So far, nothing happened. They remained as an investors. But and again, if the buyback, if the promoters want, it is a huge financial implication for them. That's it, So far, the structure has remained intact in the sense it was not disturbed. But yesterday's thing is the huge volume trading and the price going up. That sets the market or sets the tongues wagging in this part of the world. Who is buying that? Who is selling it that way? That is the kind of a thing. See, for India Cements, there are issues that, they have a legacy plants. Most of the plants are very old plants, and that keeps them in a cost disadvantageous position vis-a-vis the other competitors. So, given this kind of a thing, even if the demand is picking up, but they are unable to sell or produce more because the cost implications. When you produce more, it becomes cost uncompetitive. So they are not doing. So this advantageous position, they are not able to convert into their thing because of the legacy issues. This is the problem. That is one part of it. The other part of it is that the time was when the India Cements dominated the southern market in the sense that they are the leaders in terms of everything that thing. But that has gone now with Adani's coming in.
Right. In fact, Katie, that's the one point I want to talk to you about. The stock has been firing up recently. In fact, it's one of the few cement stocks that is up year to date. And there's this entire buzz around consolidation in the sector. The Adani Group recently bought the pen industries in the south as well. In your opinion, which are the other consolidation targets? Do you feel like India Cement could be up for grabs by the Adani Group? Is that what the sources are indicating, and hence the rally?
I would put it like that. They are they are in that vulnerable kind of situation. I would put it like that, in the sense, it's not who buys it and who takes it. In the sense that the vulnerability comes from because of the other guy is holding more stocks, and they are and then if you want to up your stake, you need a lot of money in that. Whether they have it, that's a problem. And again, it is that these are the issues, So that vulnerability. And the other issue is that Mr. Srinivasan is also nearing 80s or whatever age is on his side, and he has to pass the baton. The next who is the successor? And his daughter is already there. She is full-time director. She is being there, but still, the issues are there. How far that is transferred that thing in terms of taking the charge there. That's there. And again, these the old professionals there are all moved out, and this moved out and this and there. Maybe they're in the consulting way, but the new team has come in. So it requires a different kind of a mindset or different kind of a strategy to ward off whatever if at all there is a threat, or even to take it forward that way.
Thank you so much for that, KT Jagannathan, and you can read his exclusive piece on the NDTV Profit website on possibly what's cooking at India Cements. Definitely what the promoters will do next, what the Damanis will do next with their stake also becomes very, very crucial. Let's get some more perspective on the India Cement story and the space really from Ronald Sioni. He's research analyst of Infra and Cement at Sharekhan. Ronald, a very good morning to you and great to speak with you on NDTV Profit this morning. Let's just first get your take on the story that KT was talking about on India Cements and what the role of the promoters would be or could be. Would it be fair to say at this point N. Srinivasan would not be adverse to moving out of what is really a legacy business?
Good morning and thank you for having me on the show. With respect to India Cements, though we do not have a coverage on the stock and active coverage on the stock, but yesterday's development has been more, of the opportunities which could be, potential targets for acquisitions, especially in the southern India, after Adani Group's acquisitions or acquisition of Penna. So there can be other large players also who might be interested in southern space, and which are the companies which could be potentially be acquired in this southern market and are vulnerable to acquisition. So India Cements being one of the potential acquisition target, but nothing has been confirmed yet now, whether they would offload or divest the stake, or whether they want to exit the cement business, or nothing short. It's just potential targets whichever are there, because the continuity of the government, over the next 4 to 5 years, apart from key ministries like Road Ministry, Mr. Nitin Gadkari is also continuing. So this provides stability in terms of the demand outlook over the next 4 to 5 years for the cement space as a whole. And we have also seen time and again acquisitions happening in the sector. So that is the key reason that mid to long term visibility in terms of demand, and hence the companies might want to go for inorganic expansions rather than taking time in organic ones, and hence you are seeing a run up in especially small to mid cap cement space, whichever the companies can be a potential targets for acquisitions.
Ronald, fair point. We do understand that you don't have coverage on India Cement, but assuming that this deal does go through at these valuations, and expansion is the name of the game for the sector. Consolidation is what we've seen across the sector, with, of course, Penna Cement also getting acquired recently by the Adani Group. What does this valuation mean for the smaller players and for the sector as whole? Any other candidates that you think could be up for grabs, even beyond India Cement, actually, in the listed space?
It's actually, it would be a little bit of speculations if we name, but most of the small to mid cap players, generally trade below 100 EV by ton, and hence, what we have seen the recent acquisitions in the past, these acquisitions are done below $100 per ton at around 80 to 90. So hence there is an upside for these stocks, but very difficult to pinpoint the names whether this would be the acquisition or they would be divested in the future. But it's just a positive sentiments right now going on, but not a concrete news on anyone.
So Ronald, would you create positions in any of these cement players, regional versus top three? What is your take there?
Actually, we have been positive on the cement sector as a whole, and our preferred picks, and in the entire cement space has been for long Ultratech, Shree Cement, Dalmia Bharat, Ramco Cement, and JK Lakshmi Cement. So these are the stocks we have been preferring during the whole rally, and we would continue with the same names going forward also, because these companies would on the back of their sizes and on the back of their efficiencies would get much more benefits from organic as well as inorganic expansions. And apart from Ultratech, players like Shree Cement, Ramco, Dalmia Bharat, JK Lakshmi Cement are still trading at lower EV to EBITDA valuation multiples, and they haven't really caught up with the valuation what the sector leader has gained. And there is a quite a bit of spread between this two, or widening of spread in Cement's case. So hence we are preferring these stocks.
Couple of other things. With price hikes and the sustainability of that is what comes under question, especially given the season we are in. Monsoons is not usually a time that you see price hikes or cement sector do well, but currently what we're seeing is an aberration of sorts. Do you think there still will be cement companies undertaking price hikes? If that in this quarter, is that something you're watching out for? Because also raw material prices is something that's fundamentally helped the sector in the last few months.
All right. So on the contrary, we see quarter one, has a price uptick each year because quarter four discounts go away, and hence there is an uptick increase in realizations during quarter one. But this time around, we haven't seen prices going up. Though during June month, the companies or the sector has tried to do a rupees 10 per bag increase in prices. In few markets it has gone through, in few it hasn't, and hence overall we are expecting as per our channel checks that June month had seen about 1.5% month on month price increase. But for the quarter one of FY25, the cement prices are still below about 3 to 4% on a sequential basis. This is also because there is a room in terms of raw material prices. As we had said, that the petcoke prices have also sequentially seen correction by about US petcoke being down 5% and domestic by about 2%. So there is a leeway in terms of power and fuel costs. Freight costs are also expected to soften. Apart from there are efficiency measures which are being undertaken in the sector, which are also giving some push. So overall, there is a cost tailwind, and the demand outlook is also there, and hence we are not seeing a major uptick in cement prices. But they should be well placed or favorably in terms of demand, especially during H2.
Very quickly,
So
would you buy cement stocks at the current price, and your top two picks? I'm not going to ask you three because you've already talked about a few, but the top two preferred counters, and after the recent rally, which is a buy?
After the recent rally, still in the large cap space, Ultratech and Sri remains our preferred picks, and in small caps, Ramco and JK Lakshmi Cement would be our preferred picks.
Right. Thank you, Ronald. Indeed, great talking to you. Of course, Ronald does believe that consolidation is what is currently underway in the cement sector, and his preferred picks, despite or after the price rally, continue to be Ultratech, Ramco, and JK Cement. A quick check on implied Nifty. Remember, Asian markets are trading slightly muted. Implied Nifty is indicating to a gap down of 50 points, but it's expiry, so you may see one attempt at least to levels of 24,000 on the index on back of June expiry. We'll take a break. We'll come back and we'll get more details on the derivative markets and what's lined up in today's day of trade with Agam on the other side. So stay tuned.
Welcome back. This is India Market Open. We're taking stock of the futures and options space, and well, it's been a good place to be in, at least for those who are long in these markets. We continue to see benchmarks make new life highs, and along with that, well, considering we are looking at the options as well as the futures expiry, it does seem like the rollovers are also towards the long side at the moment. Let's start by taking a look at them. Well, firstly, when it comes to the Nifty rollovers, they stand at around 56% right now. And of course, this number is likely to rise towards the end of the session, but pretty steady what it seems like rollovers towards the long. The Bank Nifty, of course, expired yesterday in terms of the June futures. We're now looking at the July futures, and that's where we have more traction coming in. The Bank Nifty also making yet another life high yesterday, remember. And moving on in terms of the options market, today, of course, we have the weekly and the monthly options expiry as well. And what we're looking at yesterday was where we're a lot more writing inputs and perhaps on expected lines considering the Nifty moved higher. But when it comes to your overall open interest distribution picture, until about 3 or 4 sessions, there wasn't as much open interest building in the puts, and that has completely changed over the last 2 or 3 sessions. As you can see, we have fairly a decent amount of OI in 23,500, 600, and 700 puts, and that could perhaps be a little bit of a support zone for the Nifty in today's day of trade. On the other hand, we are within kissing distance of 24,000. And the reason why that becomes even more important is that should we see some strength in the Nifty any time today, and should it move above the mark of 24,000 and sustain above that, there's a likelihood that a lot of these calls will be unwound that could perhaps push the Nifty even higher. That is something that all our viewers need to keep in mind, because of the fact that since the starting of this particular series, there always was and has been a substantial amount of writing around the 24,000 call. Now, that's as far as the options picture is concerned. We're looking at a lot of unwinding in stocks, and among them, of course, SBI Life, Oberoi Realty, Crompton, or Aurobindo Pharma come into mind. Besides that, we will have a reaction on Dr. Reddy's on the back of the acquisition news today. Tata Motors and Infosys having, along with, of course, L&T, having their AGM as well. So these are some of the large caps that we are keeping an eye on in today's day of trade. But what do we do with all these factors as we move in? Well, let's get in an expert opinion. We have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thanks for joining in. Let's start off, as usual, with your view on the benchmarks. I remember that last week you were expecting a little bit of weakness, but has that view changed as we've seen the benchmarks make new life highs, or do you still maintain that we could likely see some weakness going into July?
Good morning, and thank you for having me. Absolutely. So last Thursday, if you remember, we were seeing we were expecting a tad bit weakness on the Nifty. And if you notice, Nifty did go below the 23,400 mark. And we were expecting bullishness in Bank Nifty. And that is why, if you notice, we planned a bullish strategy in Bank Nifty at 52, 53, and 54,000 using the calls of Bank Nifty. And Bank Nifty, if you notice, proved to be the stronger index last week. Currently, if you notice the FII positions, the FIIs are in excess of 92% long. Historically, whenever the FIIs have been more than 92% net long, we've seen a small correction in the index. If we extrapolate this number using a custom software that we use, we see the absolute top at Nifty at 24,250. I repeat, using this, if we extrapolate the numbers, we see an absolute top at 24,250. That is the level we are keeping in mind and forming a strategy that if Nifty goes up to 24,250, we would make money. But if Nifty forms a top over there and was to correct back in the month of July, or if it stays sideways in the month of July, with that upper range, we still make money. So if you're okay, we'll go ahead and discuss the strategy.
Please go ahead and explain what option structure you're deploying here.
Sure. So we're doing a similar call butterfly, just that the last leg that we are using this week is the second week of July and not the first week, which we used in Bank Nifty the last week. So what we're going to do is we're going to buy the 24,200 call of July end expiry. We're going to sell 2 lots of the 24,500 call, again of July end expiry. by buying the 24,200 and selling 2 lots of 24,500, up to 24,500 we get protected. That is, if Nifty moves another 650 points up from here, we're still protected and we still make money. Also, the first 2 legs gives us a net credit in the trade. The last leg is an offset for the 24,500 call, because we have 2 sold calls with 1 bought call. We want to make sure we are perfectly protected in an unforeseen circumstance. So the last leg will be a bought leg of 11th July, which is, I think, trading around 34, 35 rupees, primarily being a hedge for the 24,500 second call that has been sold. So net, we have the 24,200 call buy 1 lot, which is end July expiry, 24,500 selling 2 lots, which is again end July expiry, and buying 1 lot of 11 July, again of 24,600, I beg your pardon, which would be the last leg. The net risk in this trade would approximately be 2,000 rupees. This is taking into account the rollover that happens from 11th July to end of July. And the reward can be in excess of 4,500, depending on which part of the month Nifty closes where.
Rahul, just a follow-up question. For those who are relatively newer to the options trading market, why is it that you've chosen the 11 July strike in this case? What are the advantages of using that in the structure that you deployed?
2 reasons. One is that we don't expect a move above 24,250 in the month of July. That's the reason why we are selling, if you notice, 24,500 and buying 24,200. If Nifty goes up and stays anywhere up to 24,500, this strategy will make money. If I actually take the last leg also to be 25th July or end July expiry, then it does not give me a break-even credit or debit. It actually gives me a debit in the strategy, which means if Nifty stays sideways or goes down, I would actually lose in the position. To make sure the premium is lower for the last leg is why we take the 11th July. Also, to make sure that our view stays intact, which is Nifty not crossing 24,250 or stopping rather at 24,250. That is the reason behind the last leg being the second week of July and not the last week of July.
Absolutely. So it is critical as to what kind of net premium you're working with at the moment. And this is, of course, a part of how Rahul has chosen to deploy this particular option structure. Well, Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and also helping us how to deal with them in the near term based on your views. With that, it's back to you all.
Right, thank you for that, Agam. So now a lot of corporate news that has come out post-market close yesterday. We're trying to capture most of it. Infosys, for example, had its AGM. They say they're prepared to deliver value in generative AI with early investments in its AI offering Topaz. That's the word coming in from co-founder Nandan Nilekani as he addressed the shareholders at the AGM. Listen in.
We have integrated generative AI components into our entire service lines and developed 25 playbooks to create impact for our clients. Our clients are combining it with cloud capabilities in Infosys Cobalt to help them scale AI. Infosys has also built strong domain-relevant enterprise AI capabilities from the foundation up. We have created 23 AI industry blueprints to solve industry-specific challenges. This is also aided by the board's approval for strategic acquisitions like that of Intech, the engineering R&D services firm. Together with Infosys Topaz and Insemi's semiconductor expertise, this will help Infosys create deeper capabilities for the next phase of automotive innovation.
All right, so that was the news coming in from Infosys. Remember, Motors also spoke with investors yesterday, and we have crucial pointers from what they're saying. Their EV plans and global export EV plans also are phenomenal. But let me begin with a take from Neerav Asher, Head Equity Research Analyst at Latin Manharlal. And Neerav, I'm going to come to you on what could be the stock in the sector of the day, which is Cements and India Cements, after its phenomenal run-up yesterday. And a lot of buzz. And, just to be clear, this is right now just buzz and speculation of whether there could be some big announcements. What do you make of the cement pack and India Cements?
Yeah, good morning and thank you for having me on your show. I think as far as the cement sector is concerned, consolidation is definitely the need of the hour. the industry has been quite fragmented. There are issues relating to excess capacity. And if one were to look at the recent acquisition of Penna Cement by Ambuja, if we were to just decipher the capacity down south, we have around 200 million tons of capacity, which is spread across 35 plants. Now, this all appears to be very, very fragmented in the overall scheme of things. Most of these entities have lower operating margins. There is a huge scope for consolidation. And in a way, M&A activity, merger and acquisition activity is actually going to help consolidation in this industry. So I think Ambuja has made it very clear that they have around 79 million tons of capacity. This will add around, this acquisition will add around 14 million tons. And they are targeting 140 million tons. Now, when you talk about India Cements, I think they have around 15.6 million tons of capacity. And these are vintage plants. So the operating capacity, the efficiency of the plants is on the lower side. There are working capital related issues. So I think from a valuation perspective, if they are able to get the due diligence right, and if it becomes a value pick, but I think there'll be a lot of debottlenecking which needs to be achieved. There'll be a lot of scope for cost optimization. So I think a lot of cement plants are available for grabs, but that will all depend on the due diligence. For example, the recent Penna plant has got bulk cement terminals, it's got railway sidings, it complements the coastal strategy, logistics strategy, etc. So I think the due diligence has to be perfect, and I think it has to fit in the overall scheme of things. But all said and done, at this point of time, it is speculative in nature. If one were to take into account India Cements, the market cap is close to 8,000 crores. So 15.6 million tons, if you were to value it at around $60 per ton, then it comes to around the same market cap. So I think it's all speculative at this point of time, but M&A is going to be the necessity as far as this industry is concerned.
Shrikant also with us this morning. Shrikant, very good morning to you. Before we get to levels, since we were talking to Nirav about cements and India Cements, just to get a quick take from you on the specific counter and anything in the cement pack that you're interested in. Yesterday, actually, everything was buzzing from an Ultratech to a JK, all across the board. So your take there.
Good morning, Tamanna. Good morning, everyone. We saw a good amount of buying interest in almost all cement companies in last few days. Specifically, India Cement is now again back to the levels of 270. And whenever the stock has come to these levels, we saw some good amount of profit taking in the stock. But this time on the day of monthly expiry, we could see some more upward activity in the stock. That's the overall view. But broadly, we are of the view that if there is any position, then there is no point in buying furthermore at these levels, or even for buying fresh. I think it is better to wait for some time. Let the stock correct back to the levels of at least 245 or 240. At these levels, it is better to stay away. If there is any long position, then just hold on to it, because eventually I am expecting stock to move towards 300 levels. So hold positions. But from the cement space, we like Ramco Cement, which is around 865, 870 levels. The pattern is indicating us that the stock is reversing from after hitting the major lows in last 2 months. And now the overall formation of Ramco Cement is indicating us that it is heading for at least 950 to 1000 levels in next few weeks. It will take some time. So it's a positional buy at current levels. We also like Dalmia Bharat, which is around some 1850, 1840 sort of levels. Most of the time we saw that the buying interest emerges whenever the stock falls to 1800 or 1750 levels. So between these levels, if there is a medium to long-term view, I mean to say if there is a view of at least next 6 months, then we should look for adding Dalmia Bharat also at current levels.
Right, that's a few calls coming in on the cement pack fundamentally and technically. Implied Nifty is indicating to a little bit of a gap down. in opening today. We'll take a quick break. So we'll wait on the break, but I'll come back to you, Shrikant. When you're looking at all the cues that we're getting in this morning, so of course the last 2 days, the Nifty has done exceptionally well, and so is Bank Nifty. In fact, most indices are sitting on record highs. Do you feel like with F1 expiry later today, 24,000 in sight, or do you feel like the weak global cues may have an impact and bearing on the sentiment?
I think, whenever there is a expiry sort of day, we see activity based on the overall positions of the market. This time, the market has rallied to the levels of 24,000 without any major correction. And it was around some 23,350 some 3 days back. So in the very short term, the markets are over-retraced, overbought. So we could see some correction, maybe up to 23,750 or 700, where the market is having excellent support. And if you see the pattern of last 5 days, then the market has spent most of its time below the levels of 23,700. So now that is going to act as major support for it. And today, if we see any correction on the back of weakness in Asian markets, then close to this 23,700, 750 levels, we should look for adding long positions. I'm expecting market again will try to hit the levels of 24,000 either today or tomorrow. For the Bank Nifty, there also we are expecting range bound activity because 53,000 acted as major resistance for it. On the downside, 52,300 going to act as major support. So buy on dips should be the strategy for the Bank Nifty. On the dismissal of 53,000, we could see some short covering, but FIs are now net long. So I'm not expecting any major short covering, but yes, if there is any correction, then we should look for adding some long positions.
All right, Shrikant Chauhan, let's also get your top picks of this morning.
See, I think broader market is doing well and we need to be more and more stock specific instead of focusing more on sectors. In that space, we like GAIL, Gas Authority, which is currently around 214, 215. Yesterday, we saw a good amount of buying interest in the stock in terms of delivery positions as well as in terms of trading volume. Currently around it is 213, 214 levels. We could look for adding positions at current levels more on dips. Keep a stop loss around 205. I'm expecting stock to move towards 230, 240 in next 1 or 2 days of time. So GAIL is a buy. We also like Coforge, which is currently around 53.50, 53.75 levels. Coforge is also forming some continuation formation, and based on its technical formation, I am expecting stock to move towards 5,800 or 6,000 sort of levels in next 1 or 2 days of time. So it's a positional buy because today we are seeing some weak opening, but we can keep stop loss around 5,100 levels for creating any long positions on Coforge. I'm expecting IT stocks to remain under some pressure, but today US is going to announce all its important data like Q1 GDP numbers as well as PCE. And if that favors for this rate cut cycle, then I think we can see some buying interest or a specific buying interest in IT companies. So that's the reason it's a contra buy. So Coforge is a buy at current levels.
All right, talking about tech stocks, let's also look at this conversation. My colleague Rucha spoke to SN Subramaniam of Larsen & Toubro at their AGM and began by asking about the company's 5-year growth plans and succession planning. Listen.
See, the feeling, as I said, is one of a deep-rooted feeling that an iconic, heroic and legendary person whom all of us grown up with, especially me, have grown up with for 17, 18 years, and even before that you heard the name of the company, is moving out from day-to-day position as chairman emeritus. So it's not an easy feeling to have. It's a difficult feeling to munch. Though this succession planning in our case has been planned out from 15, 16 or even 14, 15 onwards. And it's been a long drawn-out process and a process which is remarkable and has gone without a hitch. And therefore, but whatever it is, when the time comes, you always feel that it's like having a father figure always with you. Moving on, he's still available for us. I do meet him quite often. We do check notes on major aspects or major decisions within the company. And as one knows, Mr. Naik is with his vast experience, he's got knowledge about anything and everything, and it's always good to test your ideas with him. and therefore. But from the other factor, the matter is that now there's a huge responsibility. In a way, I'm the face of the company, though there are terrific colleagues inside who handle individual verticals and who run big setups within the company. So it's a responsibility on all of us, on the e-com, on the independent executive directors at LTI Mindtree, LTTS, and at L&T Finance. But very capable people. All strong leadership from within the company, so trusted colleagues, emotionally involved with the organization, deeply committed, totally, all of them spend enormous time in the company to do what it takes to move the organization forward, highly ambitious, aspiracious. So I feel comfortable from that point of view that it's a good platform that we have. So we have, along with Mr. Naik, I myself have spent sufficient time in bringing this leadership up. And within that, there is an N-1, N-2 leadership also available. So we feel comfortable, but at the same time, there is this tinging thought or a missing heartbeat saying that, I hope whenever we take a decision, we take the right decision that you would have taken to move this elephant in the right direction. And that's a nice feeling to have, if I can put it that way.
Well, let's see if indeed some of these IT counters show that uptick as well. But it's a momentous occasion at L&T, of course, Moshe, and my colleague Rucha doing that conversation with that group. Shrikant mentioned, of course, about going long onto some of these. Nirav, what is your favorite IT name? Are you buying into IT currently?
Yeah, so we started looking at IT, but I think we would go for the bigger names. We would have a slightly contrarian approach as far as IT is concerned. We started looking at Infosys and TCS, especially after yesterday's AGM. And I think considering the price value equation at which Infosys trades, we have started recommending Infosys to clients.
Okay, some flashes on your screen, and this is important because it says that there is a large block trade that has happened in a block window on India Cements, which, by the way, on 30.98 crore shares of outstanding equity, 6 crore shares mean it's about 5.16% stake that has changed hands. Now, there are only two parties which have got such large stakes. Both parties own over 20% in India Cements. One is, of course, the promoters, and the other is the Damanis, Radhakrishnan Damani and Entourage. So, therefore, one of the two parties have changed. We don't have the details currently, but clearly seems that there is a large deal that has happened, or clearly a large deal that has happened. And guys, no wonder India Cements was up and active. If such a large stake has changed hands, could mean either of the two things
in the market.
Yes, but also could mean either of the two things that Radhakrishnan Damani isn't the one to come out, and he's said, it's been mentioned that he's patient with his investing. He does not in a hurry. So could it be the promoters?
He's denied selling or considering selling any stake and holding on the 21% on it. And if it is a promoter, Neeraj, it doesn't come as a surprise. There is a succession concern for the company. Let's not forget that while there is a working capital issue, there is the fact that they've got all these legacy plants. On the positive, they've got a very rich asset-backed balance sheet, and that's what still makes this a strong contender to be bought or picked up by whoever has. There are, of course, a big block deal has taken place. 6 crore shares.
19.4%.
19.4% has changed hands, which is largely the promoter. I can't see the money holding on to 1% stake.
Exactly.
If they've got to offload, they'd go all out with 21%. Other than that,
so now the question is, and we'll know that soon enough, officially about who has brought in. And I suppose it's very clear this needs to be seen in the larger framework of consolidation in the cement industry.
And you know what I want to know is what happens to the stock today, though. What should an investor or a trader do? That is after a 15% up.
Nirav Ashar, let's pose that to you. So a big trade in India Cements. We spoke about India Cements right on the get-go as we started off the show. Some more clarity coming in. We don't know officially who's the buyer, but safe to guess that this is going to be one move towards consolidation. How would you see the counter today?
Yeah, so as we discussed that if the valuation comes to around $60 a ton, then I think we are almost at the right price. But of course, it won't be that way. We had Penna Cements where the valuation was done at around $90 per ton. So I think this definitely should stretch up to $75 to $80 per ton. So my guess is that definitely we will see some upside from the current levels, and it seems imminent that the ownership is on the verge of changing hands at this point of time. And this consolidation will of course only benefit the industry from a broader perspective. And I think with 28% with the promoters, 21%, close to 21% with the Damani family, and we have around 40% float in the company. So that is also an important aspect which needs to be considered. So I think there is an upward bias, definitely.
There's an upward bias. You know, the other thing is, I think Puneet, my colleague, will join in and tell us about the valuation at which this deal is done. Because simply the other point being, guys, I mean, India Cement is one of the larger players out there in the southern region.
Market cap.
One of the larger
ones. In the south.
In the south, right? So, and we don't have an exact handle on what the EV per ton valuations would be for India Cements currently. We will have that once Puneet comes in. But the limited point is, if this deal is done at an X valuation, then some of the southern companies, which are largish, but are trading at a discount, because a lot of southern companies trade at that discount.
Might see a catch up in terms of valuation.
Yeah. No, and if consolidation is going to be, if consolidation is going to be the trend, then you have perhaps moving further and further. India Cements is the big one. But you would see a mop-up, a sweep perhaps
and we've seen
that
with Penna Cement that got acquired by Adani Group. But very quickly, what are the small cement listed players in the south?
There is Sagar. Ramco is not small at all, but it is there. Ramco. But there is KCP, which has got a large cement plant, 3 million ton and 1 million ton. So there are 2 or 3 at the top of my head.
KCP and Ramco. So I think a reaction on those stocks is
maybe
something we should track. But it's pre-open, and I think more exciting than the Nifty in pre-open trade will be what happens to India Cement. So if you've got that coming up on the screen, 10% on the stock in pre-open trade. This is after a 14% gain the stock saw yesterday. I don't know whether we have Puneet ready with us. Okay, so we're still waiting on him. But pull up Sagar, pull up KCP, and pull up Ramco. These are the other South players who may continue to witness if the industry is consolidating, as we believe. These are stocks that which are trading at a discount, may see a jump up in order to keep up the arbitrage opportunity between these players and, of course, on India Cement. You want to come in on this one, Shrikant, on the charts? If you're buying strength, India Cement still remains good on the counter on the charts. 15% yesterday, 10% in pre-open. If we do get a positive start on India Cement, would you consider a new long trade, a fresh long trade for intraday today?
No, I think whenever the stock recovered from the lows of 200, most of the time we saw some profit taking close to 270 levels. This time there is some unusual sort of buying interest in the stock. But even though there is buying interest, I think the stock is far, far away from its important support levels like 245 or 250. But yes, what I can say is that if there is any long position, then just hold on to it. Because based on its technical formation and the way there is a price retracement, I am of the view that this time again the stock is heading for 300 or 320. So it is better to hold the positions. Yes, but in case if we see the stock is moving towards 300, take some profit, because the overall formation is suggesting us that the stock is going to remain in a range of 300 and maybe 250.
So, Agam is here with us on India Cements. And Agam, what we glean currently, 19.4% changed hands, promoters own 28.42, Damani's own 20. So, a part deal has happened thus far.
Yes, a part deal has happened. Now, it's a wait and watch whether or not the promoters are involved. Of course, also based on their involvement, we will have to, glean whether or not that the open offer will be triggered. But that said, it is important, as you've already mentioned, that 28% held by the promoters, another 21% held by the Radhakishan family, and that also means that even if that is the case, not the entire stake has not been changed changed hands yet. I think the question remains on whether or not, or rather, who is the buyer. To quickly, give you a perspective on India Cement and what it can, in fact, bring to the table. Of course, it has a lot of presence in the southern markets, and I reckon that at this point in time, there are several prospective buyers, several relatively larger ones, which we can't name because we don't have the info yet. But it certainly will give whoever is making this acquisition will certainly have a step into the southern markets. That said, again, we need to still get more details on the valuation at which this deal comes through, and of course that will determine your enterprise value per EBITDA. Do remember that India Cement has had some challenging times with respect to its financial performance. The southern markets, the capacity utilization is relatively lesser because of the demand, which has been a little bit more volatile as compared to the northern markets. And given the fact that the cement sector is very susceptible to different markets across, and because they operate at a different level, we're just going to have to wait and watch as to how things pan out. For now, the only detail that we have is that these large blocks have come through, and we will have to wait and watch as to who the buyer is at this point in time, and also which party in India Cement has in fact gone ahead and sold this large equity.
Well, certainly watch out for this. Now, the pre-open rates for India Cements and the stock will be all over the place. Watch out for some of the other cement stocks too, but it's up about 2-3%. Now, the question mark only will be whether because of this part deal, what happens next? Do they give a part deal and give the assurance to whoever the buyer is, and then do a stake sale at a later point of time as well, and maybe a higher valuation? So that is one of the considerations that will be working on the minds of the people. Remember, 19.4, I'm not quite clear, maybe we'll just get this clarified, whether this qualifies for open offer, because it has to be above 26 for an open offer to come in. But will they make an open offer as well at some point of time for the minority shareholders, and could that happen at a higher price? I think that's the other consideration to keep in mind as well. Now, we'll get answers to some of these as well, of course, but a quick initial perspective. Srikanth, I know it's unfair because there is a deal angle out here, and what you say today right now might go completely wrong depending on what the numbers come out. But purely on the charts, it's rallied 14%, up 5% presumably today. Is there more in store for India Cements? Part one of the question is that. Part two, any of the other cement stocks from the south that look interesting?
Yeah, I think the stock has spent a lot of time within the range of 180 and 280. I'm to say since 2022, the stock is consolidating within this range. But when looking at the entire pattern of last almost 20 years, if you see the technical pattern, then it is forming some rounding bottom sort of formation. And the starting point of the rounding bottom was at 320. So we could see the levels of 320 because the overall formation is suggesting in a similar way. Most of the time we follow patterns, and based on patterns, I think the next level to watch out for is 320, and that looks achievable based on its
even as we're doing that, apologies, Srikanth, just have to address the confirmation that is on screen. UltraTech Cement is acquiring nearly 23% stake in India Cement. So this is the takeover story of the morning. UltraTech Cement is the one that is acquiring. We saw that 6 crore share block deal. It's 7.06 crore shares in all, so nearly 23% stake in India Cements will be acquired by UltraTech. So that news has now come in at 267 apiece. Let me just pull up India Cements right now. UltraTech also up about 1% in pre-open trade. India Cement at 285, the acquisition at 267 apiece. So that's the big story. We laid out for you the context early this morning with Katie, who through his sources talked about how India Cements, with an aging patriarch and promoter running the show, a succession plan not in place, working capital sort of sticking on, was a bit of a trouble, was a bit of a problem. And perhaps that's where this move has come in, 8.5% now on India Cement. So, Nirav, now we have clarity. UltraTech is the one who seems to be going in for the kill as far as India Cements is concerned. How does that change the landscape, or how does that alter the landscape of the cement business in South India? What does it mean for UltraTech? What does it mean for India Cements? What's your quick hot take?
Yeah, definitely it's a positive. I think it will only fast track UltraTech's plans. They've already got plans to hike the capacity to around 200 million tons per annum. Currently at around 146 million tons per annum. So it directly takes them to around 160 million tons per annum. So I think it will only fast track their plans. And of course, they will add the efficiency element to India Cements. They can go in for brownfield expansions. And there is a huge potential for growth in the south markets, especially with the change in regime in Andhra Pradesh, etc. There is a huge potential for development projects, infrastructure projects, etc. So right time and right entry into the right asset, I believe. And of course, we've seen the larger players concentrate on cost optimization. So while the current cost structure is around, say, 4,500 per tons, 4,500 to 4,700 per tons, there is a possibility of bringing it below 4,000 per ton. So I think the efficiency will only add value to the smaller plants.
Makes sense. Makes sense. Okay. Now, we'll get in Rakesh Arora in moments from now to talk about this as well. But remember, with this 14 to 15 million tons of 15.5 million tons of capacity addition, it adds to the 140 million tons of UltraTech. Part 2, viewers, just a basic cursory check. And actually Rakesh is here, so let's go to him for this. Because 23% stake, if they're buying from a promoter and there's a change of control, it will involve an open offer. Maybe the last 7 days average price or the last 6 months average price, it will involve an open offer. Rakesh Arora, founder of Go India Stocks, with us on the show. Rakesh, good having you. Thanks for joining in. What do you make of this deal?
So there's a lot of consolidation happening in South India. And we saw Ambuja take over Penna. And India Cement has been on block for a pretty long time. There's a lot of duress through which southern cement companies are going through, huge overcapacity. So consolidation was likely to happen. But is it confirmed that UltraTech has taken over this block? Because
yeah, Rakesh, it is confirmed. UltraTech has put out the mandate that they have done. A board has approved buying 23% stake of India Cement
at 267 rupees.
At 267 rupees a share.
Okay, so see, basically it's not so great an asset, and it has been underinvested. So I think both Ambuja, rather Adani, and Birlas have been in fight for market share. So this is a large capacity, and I think it's a good deal that UltraTech has done.
So this is a good deal, but what are you making of the valuation? Because it's come in quite expensive as compared to the other South players, Rakesh. Wouldn't you agree? And if so, in terms of numbers alone, do you feel it's a fair deal that UltraTech has struck?
So yeah, the valuation comes around, I think, around $85 per ton, which is where we thought most of these deals will happen. Very close to replacement cost, and obviously UltraTech would have done due diligence. But for India Cement shareholders, I think this is the best they could have ever got.
Rakesh, just you compared this with Ambuja's acquisition of Penna as well, and then UltraTech was in the race. So as we see the southern cement landscape being carved up, how do you see this panning out when you look at the two major players?
So the top 5 players in southern India after the Penna acquisition were holding 55% market share, and India Cement was actually not in top 5. So you add that the top 5, would now be owning closer to 70% market share. So a big consolidation already happened in southern India, and I think there are a few smaller names still left to be acquired, which should happen, I think, in this year or next 12 to 18 months. So I see further consolidation.
Which are these names, Rakesh? Which are these names which would be, sort of on the dartboard for the bigger players to mop up?
See, Orient is one of the definite ones which has been talked about in the media. So that is a decent amount of capacity which I think should be probably there. And there are, long, tail of small 3 million, 5 million ton kind of capacities in South India which can be taken out.
What will this mean for investors? Do you think a delisting could be on the cards in the near to medium term, if that sense? And what is the advice? If you're an existing investor of India Cements, what is it that you do with your stock right now? And what if you are looking to buy India Cement on back of this news break? What do you do? And also, do you anticipate a delisting in the next 6 to 12 months?
Actually, I think India Cement stock may not react up much because if the deal has happened around 260, the stock was already there. And normally acquisition process takes a few months. And there's a 8 to 10% discount at which, these stocks trade. So I don't see any near-term pop or anything. It's already played out.
So fresh and any delisting on the cards, you think that could be a likely scenario playing out for India Cement and hence its investors?
See, delisting would be largely in way of merger into UltraTech. I don't think they'll do a delisting process. So I don't think people will get anything more than what they're getting now.
Just to understand, Rakesh, since this is a 23% stake, does this trigger an open offer at all?
No. Open offer, meaning if there's a management change, probably below 26% also there's an management, there could be an open offer. Okay. But I'm sure that, UltraTech will not stop at 23 because there's a large shareholder who's owning 21. Maybe, there's a second block.
Rakesh, just stay on. Rakesh, we have more questions for you. Just want to mark the market open. But suffice to say that very likely a open offer at some point of time. The market starting off flat. I know it's about cement, but let's quickly mark specific pockets as well and bring up the heat map up on the screen. The Nifty Bank is about 1/3% lower. And let's see what individual stocks are doing in trade. Mid caps in the green, small caps in the green. Let's pull up the heat map. UltraTech and Grasim. So UltraTech was up in trade yesterday as well, adds another 3% in the session today. So that boys moved. Grasim moved a little bit. Adani Ports, Hero MotoCorp, Bajaj Autos just doing a bit of a flip today, by the way, but on a very muted day, there's a lot more red, very little green. IT is taking a bit of stick. HDFC Bank, despite the Lawrence Blanco bullishness, is down 0.5%. So bear that in mind as well. But nothing too dramatic. It is about UltraTech. Need to pull up India Cements as Tamanna comes in here. But let's pull up India Cements on the screen because while UltraTech is up 2%, the man of the moment is India Cements and 10% higher. Now, this could well be, Tamanna and Samina, that maybe the street anticipates that if there is an open offer, will they do an open offer at a higher price or will it happen at an average of the last 7 days or the last 6 months? And will that be the base price? Because for a deal to happen at 267 and the stock being locked on a 10% upper circuit, and it's an FNO stock. While it gets out of the FNO soon, it's still in the derivative space. So it'll be interesting to see what it does. Now 9.5%. It'll be interesting to see what it does during the course of the day today.
Said man of the morning, it's actually man of the match when you're talking about N. Srinivasan and CSK, and something we were talking about yesterday. What happens to CSK? Well, that's a sort of question for a little further down. But I want to quickly pull up what's happening in the broader markets because this has been the trend, right? That the broader markets have also been fairly muted, but in this case, positive relative to what's happening on the Nifty and the Sensex, even the small cap mildly up. India Cements, I'll pull up. I don't know if you can quickly pull up Orient as well, but let's see what's buzzing in terms of India Cements. Now about 10%. Let's look at Orient Cement very quickly because remember what we just asked Rakesh Arora, that the sweep up of southern-based cement companies perhaps is just beginning. It's going to be very difficult for the rest to survive. The top 5 players now have about 50%, 70% market share after the acquisition of India Cement. So Orient now buzzing 10% up. Whirlpool, I want to just mark quickly some stocks which are working this morning. Whirlpool, remember that big story. Bosch wants to make a bid for the global parent. Whirlpool 13% up in trade. Z Entertainment was buzzing pre-open, now about 1% up. Slew of good news for them. SEBI has conceded to Subhash Chandra's writ petition. KC International, I want to quickly mark. Companies received new orders worth 1,025 crores. That stock up 6.5%. Titagarh Rail buzzing for a second day in a row because promoter sells stake, that's fine. But when BlackRock Global comes and buys a rail stock, you know it's serious business going on. So 6% more and more on Titagarh Railway this morning. PI Industries also in focus. They've announced an offer to acquire Plant Healthcare PLC. A lot of positive notes out as well. A lot of stocks buzzing, but I'm going to hand it back to Samina and Neeraj because this morning is all about Ultratech and India Cements and what's happening in that space.
Both the stocks are doing really well. So while some may believe that it's a great deal for India Cement investors, usually that would mean it's not such a great deal in terms of pricing for the buyer. But both Ultratech and India Cement are trading firm. India Cement is up 10% despite the fact that the deal has been closed at 267, which is at a discount from the current market price on those stocks. Well, a few more you want to track in today's day of trade is moving on from that. It's also CSB Bank on back of a block deal where FIH Mauritius, which holds about 49.72% stake, is looking to sell about 10% in the company, and this money is going to be used for expansion purposes. Ahead of that news, I'm not sure if that block deal has taken place already. The counter is up 5.5%. Talking about blocks, Bain and Piramal had entered Archean Chemicals in 2018 and of course had bought out their loan book of about 800 crores. They have marked an exit to the tune of 818 crores, but I think this has got lapped up because stock, despite a 10% sell on the counter, is not looking too bad. It's down about 3.8%, but no surprises there. The counter was expected to see some weakness. The theme remains cement, so I guess it is India Cements or the acquisition that's keeping the whole sector up and about in trade. Ramco, RKCP, India Cement, Orient are all trading with gains in early trade this morning. You've also got a few other names like JSW Energy that's having a positive start. Hotco is looking good this morning. SJVN on order wins is looking straight, is trading firm. PI Industries, Tamana mentioned, on back of an order win is also looking good. But I think the focus is cement, and I think we should be only fair to stay with it because I'm assuming a lot of traders and investors would have lapped up cement yesterday on expectation of maybe some tailwind, some price cut, raw material price hike. But it seems like it's consolidation, and that's what's keeping the sector up and about. Now, who's next is the big question to ask.
Yeah, most certainly. And, Ultratech was up 3% yesterday. So, Rakesh, coming on that one now, up 3% yesterday, up 5% is not a cheap stock. But it is consolidating its leadership. Do you like Ultratech?
See, fundamentally, Ultratech is one of the best companies to play in cement. Not only they are leader, they are growing the fastest also in that pack. None of the even smaller companies are able to match the growth that Ultratech is having. And so that kind of leadership will definitely get premium. And that is what you're seeing in the market. But India Cement acquisition, I'm a little bit doubtful about the quality of assets. And also, I'm wondering why they have just acquired 23%. Why not the other 21% from the other large shareholder? Because this is not Ultratech style. They go for 100% acquisitions wherever they go. So maybe there's more to this story which will evolve now.
Rakesh, just one quick follow-up. Could it happen that there will be an open offer at a later point of time for the remainder of the promoter stake, as well as maybe the other large investor stake at a higher price?
It's quite possible that maybe Ultratech didn't want to pay cash upfront too much. So other guys come in open offer and then they do a merger with Ultratech with a stock swap. So that could be on the cards.
When you say there's more to the story, just want to probe there, Rakesh, on how you're looking at it. Is it safe to say that this 23% is coming from the promoter side? Because there's one other big bucket of shareholders in the Damani family. How do you see that playing out?
So, I'm not sure whether it's coming from India Cement promoter. I'm just, listening to you guys. I haven't really, gone into detail. So that's why I'm a little bit surprised because, normally Ultratech would have closed out at least a majority position before doing the deal.
Yeah. No, we're waiting for those official details as well, Rakesh. We know that the promoter stake is about 28%. The Damani stake is about 21% odd. So we are assuming that it could be from the promoters selling out. That's also based on the fact that they are, I mean, N. Srinivasan perhaps is in a place where he'd want to exit. But then again, we're waiting for that to tie up. Do you think that there's a chance this won't be a clean sort of a deal in that sense? Because they're two large entities to deal with. And like you pointed out very correctly, this is not in typical ultra tech style.
Yeah, so many. I'll be surprised if they have not really. If it is a hostile takeover, then the minority India cement shareholders are in for a good run. Because if this is a block given by Mr. Damani and the India Cement promoters have not yet sold out, then there could be a squeeze. It makes no sense for Ultratech to do that kind of deal. So I'm still wondering what is happening. As an India Cement shareholder, I think this is a very fair price, and it's a good opportunity to exit because even I think Mr. Damani has got stuck in this investment. So for him also, it is a good exit.
Good one, Rakesh. You think Mr. Damani has got stuck into this investment? He owns about 20.78% stake. It'd be interesting if they actually mark an exit in the current up move on the counter. But thank you, Rakesh. We'll of course connect back with you later when we have some more details as this deal, reaches its meaningful closure. But for now, off the day's high point on India Cement, it was at 286, now sub 280. Very likely that it may actually see some weakness and go back to prices of about 267, 268, which is where the deal has been closed at. So that was at a discount to the current market price. But it seems like it's a good deal, and you will see minority shareholders actually selling out of India Cement. The stock is up 24% year to date, so it's actually turned positive, and that could be another reason why you may see exits. So I think Neeraj cannot be ruled out. And actually, Neeraj, you want to come in on this one? Minority shareholders would start exiting India Cement. This is a good deal from the sound of it, and of course there have been issues like we've talked about, but net, if you are a minority investor, would you exit India Cement with what you know on the deal?
Yeah, it makes perfect sense to exit at this point of time. At least a large chunk of the profit needs to be booked.
Okay. So, Nidavashar, okay, so that's actually, before we, Nirav, you're given a good idea on Deepak Fertilizer. I'll probe that a bit. But Shrikant, opening thoughts from you, market-wide, and a quick word on Ultratech as well. Is there further upside here?
Yeah, Neeraj. I think the markets are now going to consolidate because even after a lower opening, we saw some recovery. But based on technical formation, I am of the view that it is going to consolidate in the market. And buying will emerge in case if we see the market is dropping to 23,750, 770 sort of levels. At these levels, I think we need to be more and more stock specific. But for Ultratech, I think based on its technical formation, in last few days, if you see the technical pattern, then it has broken important level of 11,000 and it was consolidating prior to that. So based on purely based on its technical formation, I am of the view that eventually the stock is heading for its next target of 14,000. So which will take some time, but I think it is heading for those levels. In case if there is any correction, buying opportunity, but if there is a positional view, long-term view, then even buying at current levels is advisable.
All right. So exciting morning. Thank you so much, Neerav and Shrikant, for being with us through it. Shrikant sees a 14,000 level on Ultratech. We're going to take a very short break, and we've done a lot of cement. We're going to shift focus to telecom. On the other side, Kunal Bora joins us, head equity PNB Paribas. We have to understand what's happening with those spectrum auctions and who is stacked where amongst the top telecom players. We're coming right back. All right, welcome back. You're watching India Market Open, and just a quick look at what's happening in the markets before we move ahead. Now, the indices are not as excited as the news flow would suggest. So you are seeing the Nifty about 50 points down at 23,821. The Nifty IT getting hit the most, and Bank Nifty also down in the red. But it's all about cement this morning, isn't it? With the Ultratech and India Cements deal now firming up. So a look at those two counters, 8% up on India Cements, and Ultratech, which is set to acquire nearly 23% stake in India Cements, also about 5.5% up. Another sector which has been in focus is frankly the telecom sector. And let's look at what's happening to some of those players this morning. Vodafone, just about 0.5% up today. Indus Tower, Bharti Airtel, all tepid after all of the action-packed day yesterday, not reacting too much. But we also want to get a sense of post the telecom spectrum auction. How do these players stack up and what next? To speak on that, I'm joined now by Kunal Vora, Head of India Equity Research in BNP Paribas. Kunal, very good morning to you, and thank you for speaking with us. Let's just come first to the auction data which has come through. Now, the auction wrapped up in about 2 days. Clearly not too much of a demand there. And Jio, which is, undoubtedly perhaps the largest player, looking at the least bid. How do you stack all of that up? Let's start there.
Thanks for having me. So for this auction, we expected this to be a non-event, and it's played out that way. We've seen tepid participation, total bids of about 11,000 crore. This compares with almost 1.5 lakh crore of bids in the prior auction. In the prior auction, operators were still accumulating 5G spectrum. The excitement level was a lot higher. Over the last couple of years, what we've seen is 5G is not really lived up to the expectations so far. And operators are loaded up with spectrum. So the participation was restricted to the renewals, which a couple of operators were facing. And they would taken care of that. They added a little bit of more spectrum, but this really doesn't change the competitive dynamics in any way.
Okay, so this doesn't change the competitive dynamics. What next for the industry? I mean, we've been seeing a massive buzz in the last couple of sessions as well. And all of the hopes seem to be stuck on a possible tariff hike. Now that the auction is out of the way, Kunal, do you think that there is space, or there is now the time is right for those tariff hikes which have been long awaited?
Yeah, absolutely. Even we believe that a tariff hike is imminent. You've seen a couple of tariff hikes in the past. In 2019, we saw one. 21, we saw one. And expectation was that immediately after the election results, this is something which should happen. So we've been building in that tariff hike should happen around June, July, and that expectation still remains. The sector has done very well, partly pricing in the tariff hike that tariff hike should result in a fairly strong growth for this sector. This is one of the mass consumption category besides FMCG, and the growth rate which this sector can deliver, especially if tariff hikes happen on a 2-year basis, could be as high as 14-15%. This is much higher compared to what might be the case in case of other mass consumption categories. So, while the revenue growth could be in mid-teens, you could have EBITDA growth which could be even higher. Along with this, this sector also is seeing a moderation in capex. So we've seen for at least larger operators, 5G capex, initial capex is already behind now. So capex to sales should start moderating, and this should start resulting in strong FCF generation, deleveraging of balance sheet. And in this context, while this sector has moved up, we continue to find value, especially on the medium to long-term basis. In the near term, I would not rule out consolidation, considering that there has been a very sharp rally across the stocks.
Let's do a relative comparison of the three players. And let me start with Vodafone Idea, because that seems to have the largest legroom to grow, and that's how the stock has also been reacting. As someone who analyzes that space and looks at it very closely, do you think that the turnaround has truly begun for a Vodafone Idea, and are you constructive on it?
Yeah, I don't want to comment on a specific operator, but the way I see it right now is that over the last 3-4 years, we've seen the industry continue to consolidate. The two larger operators continue to gain significant market share, and we believe that in the next 1 year or so, that trend is likely to continue. In the medium term, what you could have is a more balanced picture, wherein all three operators start reporting revenue growth and the market share starting to stabilize. But in the past, there have been significant differences in the kind of capex which the operators have done, and that's something which has resulted in the gaps in terms of market share. And we don't think that will get bridged. It's going to be two large players which will continue to dominate the market.
So two large players continue to dominate the market. So as far as a Vodafone or an Indus is concerned, just to talk about what the third player will look like, is there a limited headroom?
In terms of market share, we would say that there's a limited headroom because two large operators are not going to cede any market share. They've made massive investments and they continue to make those investments. On the tower side, our view is different. I would not put the third telco along with the tower business. For tower business, there is a significant change in outlook over the last 3 to 6 months. What we've seen is there is a much higher expectation in terms of longevity of both the tenants now. You have settlement of dues with other vendors, and that should result in eventual settlement for the tower companies also. Post that, you will start seeing new business coming into tower companies, and this should help accelerate the growth rate. With the settlement of dues, you will also start having reinstatement of dividends, which is one factor which is very important for annuity business like a tower company. So for tower companies, we are fairly positive right now because of the factors I just mentioned.
Okay. Kunal, I know we wanted to talk to you about telecom and we've spoken in some detail, but since you are here with us, was keen to know your take on the big story this morning, which is what's happening with India Cements and Ultratech now taking 23% stake. That we know is clear. Who they bought it from is not official yet. We're assuming could be from the promoters. How do you see that panning out for India Cements, for Ultratech, and then of course I'll come to the sectoral view.
Unfortunately, I don't cover cement and I don't have any formal views on that, so I'll have to refrain from talking about it.
Okay. Fair enough. And sorry to sort of
squeeze that in.
Yeah.
So besides telecom, Kunal, what is this is Neeraj here. Good morning. Besides telecom,
hi, Neeraj.
What is top of mind for you as you gaze the landscape? Any thoughts that you can share with us?
Sure, absolutely. So I look at the broader consumption space. I look at India's strategy as well. So from a consumption perspective, I did touch upon mass consumption. What we've seen over the last decade or so is mass consumption having struggled. And there is a little bit of a hope. I was in Hong Kong, Singapore last week. We had a lot of discussions regarding whether we could see a revival of rural growth. And our view is that while there will be a gradual recovery in mass consumption, we don't really see the kind of excitement prevailing say a decade back when these companies were reporting double-digit revenue growth consistently. We believe that there are structural headwinds which mass consumption faces, which includes fiscal consolidation, larger focus on infrastructure. Many of these will continue. Having said that, we do believe that considering the large headroom which the government has this time in the budget, there could be a little bit of a stimulus. But even whatever stimulus comes, that will get distributed because there could be other takers. Telecoms could take a large tariff hike, and that's something which could take away at least $5-6 billion of additional spending from the consumer side. So on consumption, we believe that there will be a gradual recovery, but it might not be as sharp as what market expects. In that context, some of the excitement which we seen in these FMCG stocks is something which we believe will get addressed in the next few quarters. We don't think the numbers will be as strong as what the market expectations are.
Okay, and since you cover strategy, Kunal, can't let you go without talking about a couple of things. So, are you anticipating a moderation in capex in this budget, or do you think a troika of decent capex, some bit of consumption focus, and fiscal deficit glide path can all coexist?
Yeah. So, if I look at this budget, government has a special larger than expected dividend from RBI. So they have a few options on what to do with it. They can stimulate rural consumption, they can spend on infrastructure, they can lower personal income tax rate, or they can pay down some debt. We believe that it will be combination of some rural stimulus and continued infrastructure spending. And so fiscal deficit, the glide path from going to 5.1 and going to 4.5, I believe it can still remain intact while without disturbing infrastructure and with some additional spending on the welfare schemes. Having said that, the welfare scheme spending, while it might increase a little bit, we don't believe it will result in any meaningful acceleration in growth for consumer staples.
Okay. Kunal, one final question from my end at least, and that is regards to what drives the market higher from here on. Private banks have just started making their presence felt, if you will, the last 10 days. Is it that bucket which takes it higher? Could IT make a bit of a comeback depending on how companies talk about generative AI? What is it that is the top weightage or top overweight for you?
Yeah. So financials happens to be a top overweight for us. We believe that there is value in large caps. We believe that mid and small caps is where there has been a frenzy. So we'll be a little more cautious there. In case of large caps, the returns have been driven to a great extent by earnings. Not that multiples are cheap right now. Multiples are about 20% expensive compared to the last decade average. But considering the strong fundamentals and like the very strong earnings growth which we are seeing, those can be justified. May not be so much of the case in case of mid and small caps. So, and in large caps, we do see private banks fundamentals to be fairly strong. We believe that while FY25 could be a little muted in terms of earnings growth, it's a sector which can provide like long-term compounding, and the entry points look fairly reasonable to us right now. We do like telecoms. We are selectively positive on IT services as well. Having said that, it's a sector which has disappointed in the past, but we believe the worst is behind and the order books remain fairly robust. And like FY25 should be a better year compared to FY24.
Okay. Kunal, great having you, but we should talk to you more often. It was lovely talking today. Thanks for your time.
Same here. Thank you.
That's the view from BNP Paribas, the India strategist Kunal Vora talking about his thoughts, constructive on telecom. Didn't get a chance to talk about autos, but before we take that break, let's hear an excerpt of a chat that my colleague Sajid had with Sailesh Chandra and P. Balaji of Tata Motors about their EV plans and JLR hitting double-digit EBITDA mark by the end of FY25. Listen in.
There are opportunities for us in the IB space in a big way because the products have matured to the extent that we are already, number 2, number 3, depending on, whichever month you talk about, competing with most of the global players in the Indian market. So we have the ability to take these products globally, right? It's about where you would like to focus first. There's a big opportunity of growth that you're seeing in India, which is going up from 4 million today to say 6 million by FY30. And you are also trying to capture a higher addressable market. So there is an effort and investment that needs to go here. But specifically on electric vehicle, I think there's a bigger opportunity because globally I'm saying, because see, most of the electric vehicles in developed countries are sold above $30,000. We have right now what products you see in our portfolio is all less than 30,000, all world-class products. And we are investing big time on tech. So I clearly see an opportunity. I would not too much depend or even consider as a key part of our strategy the current trade barriers and all which have been imposed. We should never bank on them because they can always change. But structurally, I feel that we have an opportunity and we are actively looking into it.
JLR today is generating $2 billion, 2 billion pounds of cash after capex, which means that capex is about 3.5. So it's generating 5.5 billion of operating cash flows. So there is enough cash being generated in JLR. That's a pivot to premium luxury. That is today at 8.5% margin. We'll then take it up to 10% margin next year. Yeah, and the capex is about 3.5 billion. 10% on a 30 billion business is 3 billion. So you've got enough and more cash available, EBIT available for that business to deliver. EBIT is almost cash in that business. Then we will want to lift that EBIT margin to 15% because that's the journey towards premium luxury that we are on to. All this while delivering a ROCE of 20% plus. So it is seriously capitally prudent, premiumizing, cash accretive, and it's got a dividend policy of 25% of PAT. 25 to 40% of PAT is a dividend policy. So we see no stress whatsoever as long as this particular strategy is being executed flawlessly, which we are confident of.
welcome. Joining us today is a very special guest, Mr. B. Srinivas Reddy, MD of MTAR Technologies. Mr. Reddy, thank you very much for taking the time out to talk to us and tell us about what's happening at business and the outlook for MTAR going ahead. Mr. Reddy, I want to start with the news point that was about a few weeks ago where there was a little bit of a stock reaction on back of the company revising its revenue guidance downward to 30 to 35% for FY25 versus the 45 to 50% range. Can you tell us what led to the downward revision?
It's technically not about downward revision. We were expecting our clean energy segment to move forward. So that's something which we wanted to wait and see how it goes. And obviously, we need to evaluate and see the progress being done with the new models that we have manufactured and dispatched to the customers. So we have gone with the guidance which is more realistic to begin with at the beginning of the year, and we will see how it goes during the course of the year. So we want to be a little bit more cautious in what kind of guidance we're giving for the current year, keeping what exactly happened in the last year when shipments were got deferred.
Right. So while I completely take your point that there has been a delay in closures in the clean energy space, when is it going to be, when is it fair internally? What is the expectation that you have? When do you expect this backlog to start catching up and the deal pipeline to start witnessing those closures?
I mean, it will happen during the course of the year, second half of the year mainly. That's where we can really catch up and take things forward. And it's not only about clean energy. We have done a lot of work in other verticals as well. If you look at the aerospace division, if you look at, we are getting into new verticals as well. We have done a lot of first articles. A lot of good work has been done in the last year to actually fuel the growth for the future. So that's not reflected in the numbers, but technically we have done a lot of work in our R&D and developmental programs for the future of this company.
In fact, I think that is a very good point, sir, because that will be the next trigger, I'm assuming, for MTAR Technology Defense, aerospace and the nuclear space that you're working with. It is one of the most important talking points when you talk about India and the defense story. What is the contribution of aerospace, or what is the potential that you anticipate aerospace, defense to contribute to your top line, not just in FY25, but say 2 years out, FY26?
We see a substantial progress in the aerospace division in a big way. In fact, we are setting up an exclusive aerospace plant in Hyderabad, which should be more or less commissioned by September, October of this year. And we have done a lot of first articles for many MNCs. We're working on them as such right now, and we're slowly moving into volume production. So the growth in these areas, which we have done a lot of work over the last couple of years in terms of first articles manufacturing, proving our products, certifications, etc. We have done all that good work, which doesn't really reflect in the numbers or the balance sheet as such, but this has already been done. We continue to do that. So we see a substantial growth happening in these particular sectors that we are focusing on right now.
And when do you expect that to reflect in the numbers, all the good work that you've done a few quarters out? Just give me a sense of what expectations are.
Yeah, if you look at this last year in aerospace, we have done first articles reflecting about hardly 7-8 crores of business. But this year, we are moving up to close to about 60 to 70 crores of business. But the year after that would be even doubling that kind of numbers. So that's the kind of growth we are looking at. So all this is going to reflect year-on-year basis in a much bigger way, is where we are today in terms of developing these verticals, which are very good for the company's growth on a long-term basis.
You're right. In fact, even a 6 crores to 60 crores is a 10x right there. So I guess the street and investors would be very pleased to hear that. Give me a sense of what margins in this business are. Are they better than, say, the other verticals? Is there any particular reason you believe that this could be the key driver for MTAR in the next 3 to 5 years?
Yeah, see, basically you're going to have better operating leverage in terms of the kind of volumes we are going to do in this manufacturing and assemblies that we're going to do in aerospace. So margins are going to be reasonably good. We're looking at about 24% in aerospace business as such, but it will take time for us to catch up in terms of ramping up, in terms of volumes, which we'll do in the current year and probably in the next year. So on the long-term basis, yes, it's going to be a good margin business for us. And we are creating such facilities in terms of ensuring that we ramp up very quickly. And orders is not an issue for MTAR. Obviously, we are putting everything in place, and a couple of years from today, we'll be very strong in this division as such.
Across the board, sir, what does your order book stand at, and what is the sort of guidance you have for FY25 in terms of order book growth?
See, we closed at about 900 crores plus order book, what we have as of March 31st, FY24. And when it comes to FY25, we said we are expecting a lot of orders coming in on the nuclear side, space and aerospace side, which should close to about 1,400 to 1,500 crores of order book. It can be even more, but we have to see how it goes. So that's where we are.
Right. I also want to get a sense from you on the other verticals, and we can talk about Bloom as well a little bit more. But with a significant presence with business, of course, in terms of the US, is business slow there given the fact that US elections are around the corner as well? Are you seeing a slowdown in decision making and hence a catch up in order pickup maybe 2-3 quarters out post US elections?
Yeah, that's what I think. This is a known fact that the elections are in November. A lot of big corporates are waiting and watching to see what the new policies would be. But overall, it's just a stall in terms of decision making right now. A matter of months, once that is done, the elections are done, probably a lot of corporates would take a very positive decision, especially in terms of clean energy as such. So we have to wait and watch and see how it goes. But overall, if you look at it, whatever the results are, it's going to be on the positive side of the story is what we strongly believe.
How much of your order book, sir, is coming in from clean energy at this point, and where does you see that in FY25, at the end of FY25?
Actually, I think it's close to about 45 to 50%, but we are expecting huge orders also coming from nuclear this year. If you remember, we said that Kaiga 5 and 6, which is going to be given to a much larger corporates to handle the entire nuclear project, where MTAR is going to be a partner in terms of the supplies to the core area of the nuclear reactors. So those tenders are going to be finalized in this month itself in terms of who's the L1 bidder for that, and subsequently the orders would flow in to MTR probably in the Q3 of this year. So that's what we're expecting. Close to about 500 to 600 crores of orders coming in for these orders.
That's exciting. And just coming back again to the defense and the nuclear space, because I know, like we've discussed, that's a big driver. Is a lot of the demand localized, or is there an international audience as well that you are seeing increased conversations and conversions to?
Yeah, basically, if you look at our aerospace, part of it can also be defense, right? We're also into exports of those things for various assemblies that we are doing. We're also going to enter into some of the Make in India joint venture with companies where we have the Make in India concept where the Indian content has to be more than 60% and all. So we're trying to look at those opportunities as well since we have the defense license. So if you look at it from now over the next 5 years, this is going to be a continuous progressive way of doing things. Mostly in terms of collaborations to get a jump start on the technologies that they have and then take it forward, especially in the area of defense.
Right. In terms of expansion, any expansion plans that you'd like to share with our viewers that you've planned for FY25?
We are actually looking at, as I said, aerospace. We are really expanding a lot in those lines. We already have enough capacities for clean energy, what we are working on. We're also looking at oil field sector moving forward, which is really picking up. So we're looking at that as well. So probably we'll do a lot of first articles for oil field this year, and probably it will really grow and ramp up in a big way from next financial year onwards. So we're looking at these areas. And we're also looking at various other products that we are trying to develop to get them certified by Government of India for indigenization program or Make in India. So we're doing a lot of those things in our R&D division, purely based on a clear roadmap what we have for the next 5 years. And a lot of such work we are doing, I would say seeing is believing in MTAR, and a lot of people who have visited MTAR, they've really seen the kind of work we have done. And sometimes the numbers year-on-year basis for a company like MTAR can be a We might have stalled a little bit last year, but we are very confident that we'll grow steadily over the next 5 years without any issues.
The record highs continue for the markets. Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah, and just the perfect guest to have on a day like this, which has been news heavy, eventful, and the market shrugging off any kind of fears and above 23,900. Anand Shah, head of PMS and AIF investments at ICICI Prudential AMC, joins us right now on the show with his thoughts. Anand, great having you. Thanks for joining us on Talking Point. I hope all is well. And what do you make, Anand, of this relentless move that we've seen post June 5th morning? It seems like every dips have to be bought into, but there aren't too many dips.
Hi, very good morning, Neeraj, and thanks for having me. I think, look, lot of money was waiting, if you ask me, to see the results and to get the certainty. So obviously there is part of the section which was saying, let me see the certainty, let me see if the election results are on track. And to be very honest, the way we read, I think there would be a continuity of policy, and to that extent, there is a conviction in the market that is upswing in the economy. I think it can be sustained for a few years further, while we continue to be watchful of what's happening in global markets, how they impact the various segments of the market. And to that extent, it's more bottom of stock picking from here. And that's what the market is also doing since that day.
Point well noted, Anand. What wins in this higher valuation versus liquidity argument to your mind? And is there a tipping point for either? That hypothetically, if the budget has some negatives, then that is the tipping point for the bears because it does start correcting, or vice versa, or vice versa. If there is something else to your mind which would actually make this rally extend its gains further.
So again, look, market is at new high, and the valuations, if you ask me, are not. Why I picked this point because you said the higher valuations. Look, higher valuations is not given. I think what has changed in last 4 years is corporate profitability. What we call listed companies PAT to GDP has moved from 2.1% to almost 4.8%. So while GDP is doing well, in India Inc., the corporate India is actually doing much better. It's practically doubled, and that reflects in banks also as banks' profits surge. And this is not, I would say, unexpected because from 2008 to 2020, the same India Inc. was actually struggling while economy was okay. So when I see the full picture, we went from 5.2% corporate profit to GDP in 2008 to 2.1% in 2020. Now we are back to 4.8%. So to say that the entire market rally is led by PE multiple expansion is, I would say, flawed. Actually, the earnings growth rate over the last 3 years have far surpassed the market cap growth. From 1st April 2021, if you look, Nifty profitability is up by, Nifty EPS is up by almost 132%, market is up by 52%. Now, again, that's not saying that market is cheap. No, market is not cheap. But nevertheless, it boils back to saying, where are the earnings growth rate? And there we are clearly seeing the divergence. So there are businesses which are either already showing very, very strong earnings growth rate and they are performing well, or certain businesses where the order book is telling you that earnings growth ahead is very strong and those businesses are also doing very well. Whereas the erstwhile champions or the erstwhile performers, which is the B2C businesses, they are still seeing earnings growth rate, but it's far muted or it's much slower than the overall market, while the valuations were very high. So those are the stocks which are sort of struggling in the marketplace today.
So, Anand, fair point, and I buy the argument around earnings growth having been much better than maybe the multiple expansion. But still, the levels that we are at, you reckon these multiples can sustain with earnings growth assumptions for FY25 or 26? And agreed, there will be some winners and some losers, but overall, while you don't have Nifty futures in your portfolio, but because the Nifty 50 earnings give the benchmark, I'm just trying to understand. You reckon FY25, 26 earnings estimates on the back of that, the market is reasonable?
No. So there's no denying that market is today almost 22 times trailing, and that by no means is inexpensive or it's value. It's not value. But then where are we? So today, compared to 2014 and 2019, we are sitting on a much stronger GDP growth rate. When you see bottom up, we are seeing very, very strong consolidation that has happened over the last decade and a half. You see, we have telecom 2 players, we have airlines 2 players dominating. We are seeing the similar things happening in steel and cement. And to that extent, what market is doing is for the same earnings growth rate, market is giving higher PE multiple to select companies, select sectors, because there has been a significant consolidation, especially in manufacturing and manufacturing allied, which had a very, very strong downturn since 2010 to 2020. The private sector capex is practically around 6 lakh crores in 2011, was around 6 lakh crores in 2022. So for almost 11 years, the private sector capex story was dead, and that led to many players exiting, and the surviving players, as the private sector capex picks up, it's almost at 8 lakh crores. If it picks up further, and that is what looks like would be the case, we will have winners actually getting much more out of it given that there is a consolidation in the industry.
Got it. So, Anand, I heard you say that some pockets, by virtue of the order book that they have, or by virtue of the earnings promise that they may be giving as terms of guidance or in terms of assumptions, might continue to stay expensive. Now, what is this? Because one can argue, for example, the way the defense names bounce back, because we know the order book out there is very strong, right? We know the order book for some of the cables and wires or capex beneficiaries is very strong. And for a very significant period of time, when I'm just using these names as illustrations, but when stocks like ABB or Siemens or some of the others get marked up the way they did, you know, the market likes growth there versus value somewhere else. I'm trying to understand, where is it that you find favor within this whole landscape of companies which have got order book, earnings promise, but valuations might be stiff?
Sure, I think actually you're right. And 2 years back, it was easier. We owned a lot of these names, and even still we own some of them in the portfolio, because that time a lot of this thing was not priced in. Things were reasonable. Today, to me, in some of those segments, pendulum swung on the other side. The stocks have been relentless, and to that extent, we've been also sort of trimming our positions on many of these. Coming back to the question where you asked me that where do I find value or which are the areas, I think last time I also spoke on your program that the old economy manufacturing, I think something that has changed significantly in last few years, actually since 2016, is China's dominance in manufacturing, which meant that they were not only producing for themselves, but they were producing for the rest of the world, and they had overcapacity on everything, which meant that many manufacturing industries outside China, including India and Europe and US, struggled to make money, struggled to have a decent return on equity. And to that extent, there is a significant underinvestment in those segments of the market, be it metals, be it textiles and others, which is old economy manufacturing. And that is the area where, even still today, given that they have not performed for almost a decade and a half, there is enough and more skepticism. I like it. Because to that extent, we are not overpaying, but it needs to be seen that as China becomes very prosperous, it moves towards high end of manufacturing and it lets go the lower end of the manufacturing. Does the India benefit? Do we see lower dumping of many a low end of manufacturing products, be it metals, be it tires, be it other places where we can see a significant improvement in profitability sustaining, because profitability is already improved, but sustains. And we can see next round of growth from the domestic market as well as from exports as China reduces its supply of those products in the rest.
Fair point, yeah. And I think that point of time, we had a fantastic conversation. So viewers, you can actually go back on our social media handles or on our website and try and replay some of those bites, because I think they hold true even now. Albeit account for some valuation changes, but they hold true even now. Now, Anand, the other aspect is real estate cycle or the housing cycle, right? And the reason I bring it up is obvious. We've had a large cement deal happening today as well. What's your sense? Because, I mean, if you look at numbers and the kind of demand, so on and so forth for the next 5 years, it seems like we are in the midst of this super cycle which will continue. One, do you believe that? Two, and how best to play it? Also, of course, give us a view on cement, because consolidation seems to be the order of the day here.
So let me start with real estate, and it's a very important element. If you see the private sector capex, a large part of the household capex is in the housing, and I think that needs to be nurtured. And I'm using word nurtured because invariably what happens when the household is prepared to buy houses, prices move up, and then it becomes unaffordable, and then the entire cycle ends. This time around, we should invest significantly in urban infrastructure. We need to expand our cities, because I think eventually the only way India moves to 5 trillion, 10 trillion, and 15 trillion is when you can twist. Today, approximately 65% of population live in rural India, 35% of population lives in urban India. I think this needs to be reversed. We need to provide not only housing, but we need to provide jobs. So housing is the first step. We all along know it can take most unskilled labor also. So the road construction, housing is generally the beginning of the job creation, beginning of the consumption of steel, cement, and then as people buy those houses, people start living in those houses, it leads to the next round of investments, be it in tiles, be it in paints, be it in faucets and clothing and shoes and everything. So it leads to the next round of demand for manufacturing. So I think we need to nurture construction, need to nurture this housing, let the prices remain reasonable, let the prices don't shoot up very high, which sustains the demand. I don't think there is anybody, thinking that India doesn't need houses. I think we need a lot of house construction provided the prices remain benign. And that can lead to next round of growth in manufacturing. Both housing and manufacturing can create jobs, which in turn can lead to demand for consumption items, which then leads to a virtuous cycle. So I think this is something which we like, but we also worry that in India, typically the prices start moving up and that leads to an end of the housing cycle. Coming to cement, I think cement is not uniquely poised. I think many of the sectors in India have got consolidated. We had a strong or a very long downturn in manufacturing and allied businesses. We have seen consolidation in cement, steel, airlines, in telecom, in many other sectors. To a large extent, over the last 2 decades, we are seeing consolidation in banking also. Good news is that there is overcapacity. I think there is also a greenfield capex happening, or at least brownfield capex happening in many of these areas. So to me personally, hopefully the prices will remain benign. It should not lead to a significant inflation in the economy. That's my only worry, but otherwise consolidation is good news for investments, good news for growth and benign pricing.
Okay, Anand, very quickly, before I thank you, we have a battery maker coming up next. That space is hotting up now. Both Exide and Amara Raja now have some tie-ups which give them advantages. Any thoughts on this pocket? It's a very small investable pocket, I know, but still wondering.
I think very interesting works happening in China. Battery prices have collapsed. I think it has large implications if we can use this battery at a utility scale. Last 2 rounds of auctions that have happened for BESS, the battery storage systems, battery energy storage systems, are very, very heartening to see, because India has potential to do a lot of solar, but solar has its idiosyncrasy. It's available only in the solar hours. If we can use battery to make sure that we have additional 2 to 4 hours of electricity provided through a battery storage system, I think it leads to a significant jump up, or it's a boost to the solar investments. So I think battery is very, very critical. As I said, and as you rightly said, India is just starting, but China has done massive investments, and the lithium prices have come off, the battery prices have come off, and it's actually very good news for the overall ecosystem, if you ask.
Let's see. Anand, thank you, of course, for joining in. Maybe you might be interested in what our next guest has to say, because he's Vikramaditya Gaurneni, Executive Director, New Energy at Amara Raja Energy and Mobility, joins us right now on the show to talk about the big announcement that they made last week. They've announced a strategic technology collaboration with Goshen Innobat Batteries. Vikramaditya, I hope I'm pronouncing your name correctly. Thanks so much for joining in today. And do tell us the significance of this development, because obviously the street likes it. At the onset, we loved seeing the announcement and what it could mean for you, but would love to hear from you the details.
Sure. Good morning, and thank you for having me on the show. I just want to kind of comment on what the earlier gentleman was saying. I think definitely the future of storage is bright. There is a little bit of concern on the pricing. But India being a country that has, I don't think we're going to be slowing down on our renewable investments anytime soon. Getting batteries at the right price, the right technology is going to be very critical. And it's something that I think is quite enabled with the kind of partnership that we've signed. The partnership we've signed with Goshen Innobat, it's a European subsidiary of Goshen High Tech from China. They're a top 5 player in China, and by LFP chemistry, one of the leaders, especially in the technology. We believe that, for all of our automotive stationary customers that are emerging, that this is going to be a great move. It allows us to bring world-class technology and products, to their doorsteps in India. And we're looking forward to, collaborating deeply, not only in cell making, but also having access to the raw materials, that kind of pricing that your previous guest mentioned, and being able to eventually secure some level of raw material security and pricing so that we can have a successful project here in India.
Got it. What are the kind of timelines that you look for all of this, Vikramaditya? I mean, in terms of one, this to get consummated, and two, you getting access to not just the cell technology, but the other things that you spoke about.
So the technology transfer would begin immediately. The project governance chart is in place, and we're starting to exchange the information. Over the next 3 to 4 months, we would be, for the phase 1 plants, going through a detailed factory design, industrial design, which equipment we'd want to use, utility, everything, the detailed project scoping, and then hopefully 3 to 4 months we'll be able to commence construction on the products for licensing from Goshen. And in the meantime, there's an entire effort to get, our R&D team, our scientists to get the technology information, get the product information, get all the right things, start setting up the supplier-based supply chain. So once we start construction in about a quarter from now, best in class in China, 12 to 16 months even, they're able to get factories up and running. I think that's quite aggressive, being our first time in India really happening. We believe 2 to 2.5 years for execution, getting to start of production is a reasonable target. Definitely trying to keep it closer to 2 years.
Got it. So between 2.5 years after a quarter's delay or a quarter's period goes by is what we are looking at. Okay. From both ends, is this an exclusive partnership, or could Goshen also do a tie-up with somebody else, or you also need or do a tie-up with some other global major as well?
The agreement is non-exclusive in nature, so that's something that we both sat down and agreed upon. I think the way that at least Amaraja figures is, I'm not too concerned about competing with other licensees of my partner. The world is very large. I think there's a lot of other players there. Like I said, Goshen is top 5 in China, which means there's other large players who are coming to India, who are importing to India. We didn't intend to be that there wasn't a deal breaker for us. Neither are they exclusive with us, neither are we exclusive with them. But for all intents and purposes, I think once we have this technology in hand for the LFP chemistry, there's no reason to look out. I think it's quite comprehensive, the product portfolio that we're going to be bringing to India. So we're just looking ahead for that.
Got it. So way ahead, if I look at what's happening in India and possibly elsewhere as well, Vikramaditya, battery companies are doing tie-ups with OEMs. One of your peers has done a tie-up with the South Korean major Hyundai, and there are others as well, I believe M&M, Maruti, etc. What's the roadmap for what you do? Because I'm guessing this will not be necessarily just a B2C after-sales product, right? You were looking at the entire market. How do you stitch up partnerships? Is this India-based? Do you have access to other markets? Please tell us.
So you're absolutely right. I think the existing battery play we have, which is largely aftermarket driven, it's a completely different scenario in electric mobility. Mostly it's going to be B2B to the OEM, and any after-sales service is also going to be largely driven through the OEM, being much more complicated packs. In terms of how we engage with OEMs, I think we're very flexible and open-minded. We see different models around the world. There are OEMs who've invested in their own cell making independently. I don't think that's been off to a great success. I can't think of many great examples where it's been very successful. But there are cases where there are joint ventures with the battery maker, technology licensing from the battery maker, which is now happening. In the United States, if you see recently Tesla, GM, Ford, a bunch of OEMs are actually licensing technology from CATL, who's the global leader. In the case of Excite, which you mentioned, that's more of just a supply arrangement. I think we're open to anything. If any OEM wants to have a deeper tie-up with us, I think we're willing to engage in that conversation. As for the Indian market, of course, we already touched on the business model not really being aftermarket driven. But in terms of exports, we have broad export rights as part of this arrangement. There are some, mutually agreed and I think acceptable conditions in which exports are slightly curtailed. But if we look at the reality of it, I think there are some markets that we are quite strong in as Amaraja in the Indian Ocean Rim with specific segmentation, especially stationary storage. We supply pretty much all tower companies, telecom tower companies in this region. We are quite strong in UPS, and we are very, very strong. We're having a very strong portfolio in light electric mobility. So two-wheeler, three-wheeler, where India is anyways the largest market in the world, but there's a lot of synergy with Southeast Asia as well. But even then, I think the kind of project we're talking about, 16 to 20 gigawatt hour, it looks quite small when you're looking at the type of installation base in China that's announced in the United States and Europe. So I think we'll opportunistically pursue exports, but largely we may not have that kind of scale to divert out of India because as it is, the Indian capacity, Indian demand itself is growing, and we're looking forward to catering to that market.
Okay, fair point. Just a follow-up there, Vikramaditya. So yes, you would be open to talk to OEMs if they want to come. I'm just trying to understand, would that be a strategy that you would pursue? Go into the large Indian four-wheeler players and do some tie-ups with them? Because I'm guessing that the tie-ups that those guys might have with the other battery makers as well need not be exclusive. Why would an OEM want to depend on only one player or one supplier?
Like I said, different OEMs are pursuing different strategies. Many of them who we've, many of our customers who we started contacting ever since the news broke, they're very optimistic about it. It's mostly just looking forward to a supply arrangement. But ultimately, I think any OEM, especially in a nascent market like India, may not be as keen to tie up, especially in an exclusive manner, because they are taking a bet on technology. When localizing a product, there's an advantage there that eventually the cost and quality can match imported product. So that's something we're looking to do. Ultimately, I think it's up to the different OEMs. There are OEMs who've announced investments into their own cell making as well. So I don't think that we would be going and trying to compete with them there.
Got it. But I also heard you say that some of these haven't quite got off to a very good start. So it'd be interesting, maybe they entrust an expert like you or some of your peers for this. Last couple of questions, really. One is, what's the growth? I mean, various figures out there. Would love to understand how you guys in your business modeling think of the growth of the industrial battery segment or the overall battery segment, let's say till the end of this decade. Maybe a CAGR number, maybe post a couple of years when EVs become more mainstream than what they are right now. Any numbers out there?
I'm not going to be able to give you an exact number right now.
Okay.
But I think overall the battery market is growing. It's growing on both the legacy powertrains as well as the new upcoming ones. I think that's the beauty of India as a market. We're a developing market, growing market, and a largely underpenetrated market as a vehicle market. So we do see that there's going to be a long runway still for legacy powertrains, and we'll continue to have similar growth numbers to what we have today. And on the EV side, I think the growth is going to be a little bit more explosive, but it's going to take time to really see mainstream adoption. And probably where we'd like to see, we're also trying to figure out is how high EV penetration will go organically. And in some countries where policy is a more major driver to get it above a certain threshold, we need to see where India really wants to end up. And on the stationary side, while demand for lead-acid batteries in certain segments is flagging through exports, where we can still send our products at great pricing, great quality, there's still a robust demand for lead-acid battery, and there's of course an export demand. Bringing lithium into different stationary applications slowly is something we've already started doing at a pack level. And we do believe that energy storage is going to be a really significant market going forward. And that's something on our roadmap as well.
Got it. Yeah, one of the notes had expressed concerns about the lower growth in the lead acid battery segment for sure. So thanks for addressing that. My final question, Vikramaditya. Again, I know it will be difficult to give numbers, but I'm trying, right? You mentioned a period of, let's say, 2 years or 2.5 years, post which this factory comes on stream. Let's assume it does. And then I give you a 5-year block and ask or request you to tell me, under the blue sky scenario, everything going as per plan, and operating at 100% capacity, etc., etc. What are the kind of numbers that an investment of this nature and a manufacturing plant of this scale can generate? Maybe kind of revenues that it can generate at full capacity, optimum capacity, the kind of margins that you could work with in a product for a product like this. Can you share some details there?
I want to preface this saying that our overall investment quantum, which we talked about in Telangana, 9,500 crores.
Exactly.
We still have some plan to kind of deploy that over the next 5 years. Only that we are recasting that number a bit because with the partner on board now, looking at the type of cell portfolio we want to bring out, we do believe there's a lot of optimization that they're going to be able to bring to the table. Our capex numbers are going to be largely optimized, possibly increased if we see even a good healthy order book coming in, with the better technology. With the initial planned investment numbers, we were looking at getting up to like a 2.5 billion USD kind of a revenue target. In terms of margin, I know it's not the answer you want to hear, but even if I was to ask my partner what kind of margin profile they see, the supply chain being a very very dynamic in nature, pricing very dynamic. Sometimes the prices are dropping to bottom, sometimes they're rising. I think they also have a hard time giving a very long-term projection on the margin. I believe that we're not going to have that I won't have that kind of clarity to give you today. And next time we meet, hope to give you a little bit more.
Yeah, maybe next time in person. Would love to see the construction as it starts as well. But congratulations on this deal, Vikramaditya, and all the best with all your plans.
Thank you so much.
Well, that's the Executive Director of New Energy and Mobility at Amara Raja talking about the big deal that they did last week. That's all that we have at the time on Talking Point. On the note that the markets are trading at new highs, we wrap it up on this edition of Talking Point.
Another morning, another record high for the markets. The Nifty trades close to 24,000 and the Sensex about the 79,000 mark. Most sectors trade firm, led by gains in banks and metals. Auto and IT come out as the only losers in trade this morning. And India's largest cement company, UltraTech Cement, has approved the acquisition of 23% stake in India Cement. Both stocks trade positive. And SEBI will be meeting later today. Tighter regulation and selection of F&O stocks. New finfluencer rules on the cards. Hello and welcome to the F&O show. It's a rainy day in Mumbai, but it seems like the markets are raining gains. 3 straight days and 3 straight days of a new life high.
Highs, yeah.
Not just on the index, but Bank Nifty as well. I mean, the participation coming in from Bank Nifty is very convincing, especially because a lot of traders, Agam, yesterday were a little circumspect on the next upside on Bank Nifty, but it's defied pretty much everything and moved upwards.
That's the exact point that I was trying to make, Samina. There was a little bit of skepticism of whether or not we'll actually, sustain these gains, whether or not the Nifty, in fact, will move closer to 24,000. And it does seem like we are within kissing distance of that.
And Agam, this morning, I think when we were doing the trade setup as well, Asian markets were trading slightly weak. You've got that much anticipated SEBI board meet, which may dampen the sentiment across the derivative and the F&O segment. So that is a little bit of an overhang on the markets, you'd imagine. Implied Nifty was down about 60 odd points in early minutes of trade. But again, ignoring all those cues and all those factors, the Nifty is inched higher. It is the F&O monthly expiry. A push to 24,000 was expected. I thought this would happen in the second half if Europe opened up firmer, but it seems like it's almost a given as we see it. 44 points away, to say the least.
Yep, well, notwithstanding the sharp knock that we've seen in the last 1 minute. And it actually is a very, very sharp knock because it's suddenly we're below and we're testing 23,900.
I don't know about that.
Well, it's going to be a choppy session because we are at extremely heady levels. And I'm sure that a lot of bulls are going to potentially jump the guns and even go long to perhaps gain that traction with respect to the 24,000 mark. It's going to be a tough market. You can already see that happening with the first 1 hour trade. We've already seen some very, very sharp moves on either direction. And once again, just keep an eye peeled. And on that note, I'm going to quite quickly get in Rajesh Ravi of HDFC Securities, who's going to be joining us to, perhaps discuss about the cement sector and the latest update here. From what we understand, of course, is that UltraTech Cement will pick up 23% stake, or rather has picked up 23% stake in India Cement. What does it mean for the sector? What does it mean for these two companies? Rajesh, good morning. Thanks for taking the time out. Your initial view on how this will pan out eventually?
Good morning, Rajesh here. Everyone, the top players are trying to, consolidate their capacities in the industry. Last few years, we have seen many, such deals happening. And this will obviously be positive. First, from an industry perspective, if I look at it, the South market, the fragmentation because of the recent 3 major acquisitions, which we have seen, Kesoram being acquired by UltraTech, which will be amalgamated in UltraTech this financial year. Penna being acquired by Ambuja, and now India Cement. While this prima facie seems to be just a financial investment, but I would believe that UltraTech would also have had some discussions with the promoters at India Cement, and ideally it could be a combination of both the money's stake which UltraTech seems to have acquired now, and this should be followed by the promoter stake coming up under UltraTech's fold. So if that happens, obviously the thought process is to consolidate the capacities and protect market share, and this in turn should lead to the industry capacity market share for the top 5-7 players to significantly improve. Prima facie, my understanding is between FY23 to FY26, cement capacity of the top 5 players would increase by almost 10% point, from around 55% closer to 65-66%. Similarly, in clinker capacity is also
Just very specifically, the deal of the 23% has happened at 267 rupees a share, which translates to $90 a ton, which is close or higher than the replacement cost. So do you think it's a good deal for India Cement, or is it a good deal for India Cement A, or do you think it's a better deal for Ultratech? Because I feel like it's come in expensive.
So the replacement cost for a new asset, obviously today, you cannot set anything below $90 to $100, But this is one thing. Second thing, it is not just about any deal today has to be looked upon, not just upon the replacement cost, because that is obviously a big challenge, getting mines, clearances, pooling land, and then setting up the capacities. We have all seen a greenfield project. It takes anything between 3 to 5 years. Cycle. So acquisition, anything between $80 to $100. If you get a good asset, good operating assets with quality limestone and backed by infrastructure, paying $90 to $100 is not at all an expensive franchise. Here, in case of India Cements, what we understand of these assets currently, most of the plants are very old. Obviously, the plants will need significant investments by anyone who ultimately acquires it. Second, as the investment promoters have been talking about in various earnings calls, that they have a good amount of land bank which they would want to monetize. So, how much the new promoter would have to spell out how much is such opportunity, and that is where, the netted value of the acquisition would need to be checked in. So there are two primary main concerns, and from an India Cement shareholder perspective, I believe given the assets quality and all, expecting anything better than this could be a tall order.
Rajesh, I want to also talk about the various scenarios now, because we don't have confirmation as to who the sellers are just yet. The assumption, of course, in this case is that it is in fact the promoters and not the other party, that is the R.K. Damani Group, which in fact also holds a substantial amount of equity here. Under what scenarios can an open offer happen? And if that does so happen, what are the parameters that could be considered to determine the price of that open offer?
So, while the technicality, I am not very, clear on that, but I believe it is if the promoter stake is acquired, that would trigger open offer. It's not necessary. Okay. So I'm not sure how this will follow through. Okay, so it's 23%. There is no open offer. If the stake increases beyond that, open offer will be triggered. So if at all the next investment has to be, if the Ultratech is seriously evaluating this asset, has to follow it up with the promoter stake. And if they're looking to acquire the promoter stake, then obviously it will be followed up with an open offer.
This is one more question I have with scenario. Now, let's assume that Ultratech Cement, that's not an assumption. We know that they've bought 23% stake in the company right now. And naturally, for now, as things stand, they do not have controlling stake in India Cement. But this obviously also means that it's not necessarily just a strategic investment, because, India Cement has its own set of challenges with respect to profitability, which have been so volatile of late. What do you think the next steps could be? What do you think the management of Ultratech Cement is thinking about with respect to and keeping in mind India Cement going forward over the course of time?
So, as I said earlier in the call, what our understanding is that if Ultratech would have bought this stake, they would obviously have in mind, and some discussions would have followed through with the promoters, and such a next round of announcements may come through, is what is my understanding. And second, if at all, if that is not happening, this could be just a strategy that this asset may not be acquired by another competitor, and hence to, lead to market losing capacity market share. But ultimately, the Ultratech's mind would be attuned to, getting it underfold and not just as a financial investment. So this could be just part one of the overall story.
Sure. While we'd love to talk to you longer in India Cement, but while we have you, what does this mean for the cement sector? Because now the two major players will control 35% of capacity. Consolidation has been pretty much the theme for the sector. And with the pricing that this comes at, there are other South players who are available much cheaper. Does it mean that those could be up for grabs as well? Who do you think could be the next target? And what do you do with the sector generally? Any buy calls here after this recent rally?
So, first thing, obviously this is driving consolidation, and this is what we have been talking about for long. That the market will eventually get consolidated. We have seen long tail of small producers in the industry, and that is why the industry hasn't seen any pricing power in the past 10 years. The price CAGR for the industry is hardly between 1.5%. So the predictability has also been low. So with such consolidation, almost 10% point improvement in industry consolidation. If you look at top 3, top 5, top 7 players, so that bodes well for the industry in terms of predictability, earnings predictability, the pricing. It will be easier for the industry to take on, pass on cost inflation and retain some of the incremental margins. This is it. So this is indeed positive for the industry from a long-term perspective. And from a medium-term perspective, near-term, there could be some hiccups because both Penna and India Cements, if at all they're finally acquired, India is finally acquired, we'll see a ramp-up and some incremental volume coming in the market, and that may not be great for the pricing in the short term. But if I look at a FY26, FY27 story, the industry will see better pricing going ahead. Smaller players, it is again, companies which are balance sheets are stretched out and they have low visibility on their sustainability, they would be more vulnerable. So, again, it's case to case. We saw Sanghi, they did not go just because they wanted to sell. Similarly, Penna was under heavy stress. They were making operating losses. That is why it went through. In India Cement, the probability seems to be similar, that the company is bleeding in terms of operating numbers and all, and with heavy debt, and that is why it went under the hammer, or is seemingly going down the hammer. So we have a lot of assets, sub 5 million ton, which are trading at even a few companies under 10 million ton, below $50. But it is their intent has to be first, and which you cannot take a call, for the sector as a whole.
Right. Well, fair enough, Rajesh. We leave it at that. Thank you so much for joining us and giving us your perspective on the latest big deal in the cement sector. Of course, we'll continue to give you updates because the story is not over yet. We have plenty more to come through, and perhaps the deal has not been concluded as Rajesh himself has, or rather is expecting. Of course, that said, we have plenty of traction with respect to Ultratech Cement as well as India Cement. Remember, both these counters are also in the F&O space. But we put the spotlight back on the markets. We slip into a short break. We'll come back and we'll talk about the Nifty as well as the Bank Nifty. Stay tuned in. Back in just a bit.
back. You're watching the FNO show, and I think we spoke too soon, Agam and myself. The markets, the last few minutes are collapsing, to say the least. We're at the day's low point on the Nifty 50. We've moved from positive territory to trading in the red, 22 points off at 23,846. Not everything is lost just yet, so you don't have to get worried. But we did say that it's a choppy market. It's going to be volatile. But Bank Nifty has also seen a 400-point drop from its day's high point. And the breadth of the market is also now in favor of the bears. So you're seeing a lot more red on the screen as opposed to gains that we were seeing just a few minutes ago. Nilesh and Jatin now join in with their top trades and recommendations. Nilesh, at 10:30, it seemed like 24,000 was a given in terms of today's expiry. We had defied pretty much all the global cues and the overhang of the SEBI board meet. But in the last 5-6 minutes, there's been a sharp drop. What has led to that, and how does one trade the index? Is this a buying opportunity, you think, this intraday, last couple of minutes of weakness that we've seen?
Hi, good morning. Looking at the today's immediate move that we have seen just now, I think it's purely from expiry point of view. Today we have a monthly of an expiry for the Nifty index, and looking at the sharp profit taking, I think there will be a round of buying from the support zone. So immediate support is at 23,800, and 24,000 is unlikely to break in today's trading session on the upside. So for the day, we expect Nifty to expire in the range of 23,800 to 23,900. So that can be 100-point trading range. If at all we see any further dip towards 23,800, that can be used as a buying opportunity. And we might see another pullback in the second half of the session.
Okay, that's the view on the Nifty 50, but let's get in Jatin as well. Jatin, morning. How are you reading these cues, which are actually turning out to be very volatile this morning?
Good morning, everyone. So, as far as the Sher Khan research team view is that since last 3 trading sessions, the Nifty has rallied around 600 points. Around 24,000, we have the max concentration of the call open interest, or around 2 crore shares open interest. So today, in the initial hour of the trading session, we had a dash towards 24,000, and that is precisely where the selling pressure came in. So we believe that there could be some amount of consolidation in the near term, as the Nifty has already rallied around 600 points, and a crucial psychological resistance of 24,000 also is there in place. So we believe that there could be some amount of consolidation in the near term. However, as far as today's expiry is concerned, we believe that we are pretty positive, and this intraday dip should be used as a buying opportunity.
Well, that's as far as the Nifty is concerned. Of course, we can also take a positional view of the Bank Nifty. So, Jatin, coming back to you on that one, is your view similar on the Bank Nifty then?
Bank Nifty also, we can see around 2,000, 2,200 point kind of a rally since the last 3 to 4 trading sessions. In fact, Bank Nifty has been the leading index in the form of contribution to this up move. We believe that there could be some consolidation or a retracement of the rise that the Bank Nifty has witnessed in the last 3 to 4 trading sessions. However, that would be considered as a buying opportunity. We believe that in the case of Bank Nifty, 52,400, 52,300, where the 20-hour moving average is placed, that could be a crucial support. So in case the intraday dip comes to around these levels, then that should be used as a buying opportunity for a target of 53,660 on the upside. This is a positional kind of a view. So Bank Nifty, I think the expiry was yesterday. So that's a positional view on the Bank Nifty.
Yeah, in terms of stocks, where are you seeing the action? I'm very tempted to ask you about the cement pack, but I'll let you start with what your top recommendations are in terms of trade. Nilesh.
So I have 2 buy recommendation. First of all, we are liking NBFC space as a whole. So Piramal Enterprise, given the kind of run-up that we have seen for the 3rd consecutive session, there could be a follow-up move in Piramal Enterprise. Structure hints that the upside seems to be open up for 942, 955 kind of target. Immediate target could be 950, and 910 should be the stop loss for the long position. Apart from that, another stock where we have seen a good consolidation in past few trading sessions, that is BHEL, BAIL. So here we have witnessed good rollover data so far, and it is indicating a possibility of a consolidation breakout going forward. So 311 should be the target for the long position, and 293 should be the stop loss for the long positions.
All right. And Jatin, what about you? Stocks on your radar this morning?
So we have two buy recommendations on our radar. The first one is Mahanagar Gas. So on the hourly charts, a triangle pattern formation has been forming. We believe that it is likely to break out on the upside. So MGL is a buy. Stop loss will be 1494 and target will be 1560 and 1575. The next recommendation will be on Dabur. So Dabur, we have seen after a sharp run up, it has been consolidating since last 3 weeks. It has reached the 20-day moving average support and thereafter witnessing buying interest. So the stock has now reached a crucial support zone, and now we expect the next leg of upmove to begin. So Dabur is a buy. Stop loss will be 596. Target will be 623 and 635.
Nilesh, how do you feel about HDFC Bank? It was a lone non-performer yesterday when the bank Nifty made a new record high. And this morning as well, there's no major traction coming in at 1700. Fundamentally, of course, all the big brokerages are very bullish. On the charts, does it look like a good entry point at 1700?
So given the kind of run-up that we have seen from the levels of almost 1500 to 1700, so 200-point run-up that we have seen in the June series so far, so there could be possibility of some amount of profit taking at the high levels, and which may drag this particular counter towards 1680 to 1670, and that will be again a good opportunity to initiate a fresh long position. So I would rather wait for some dip to get into this particular counter. The buying range, ideal buying range could be 1660 to 1680. Upside target from a July series point of view is intact at 1750. So a new record high is again expected in HDFC Bank towards 1750 plus kind of a target. Stop loss can be placed below 1635.
Right. Well, we have to talk about the cement sector. So we're going to take in stock as to what's happening with both Ultratech Cement and India Cement. India Cement, of course, do remember that it has gone into an F&O ban. So perhaps all those who are new entrants today will have to, well, square off their positions today itself. Ultratech Cement, of course, is a different equation. Jatin, anything on the cards as far as both these counters are concerned? Do you see any potential opportunity towards the long or the short?
Potentially the opportunity was there, but now I think you'll have to wait for some time for a cool off. I think Ultratech Cement could be our preferred choice, but definitely not at current levels. I believe that there has to be some amount of cool off, and thereafter we'll have to revisit again. But if I see positionally, then yes, the trend for Ultratech Cement is pretty positive. I think around 11,300, 11,280 are the levels around which there's a gap area. So that could potentially act as a support zone in case of a dip. So I'll be closing, watching the levels of around 11,300 and thereafter taking a fresh view at that point of time. Currently, there is no setup to initiate a fresh long or a short.
Right. Nilesh, yesterday's one stock in the large cap space that helped the index was RIL. The gain of over 4% this morning is a little quiet. In fact, it's adding to those gains, nearly 5% between yesterday and today. Would you go long on RIL? Do you think it looks like a good trade, or it's going to be a slow mover from here on?
On a daily time frame chart, if you look at from past almost 3 months now, the stock was consolidating in a very tight range of 3,020 on the upside and 2,820 on the lower side. So that was a band that has been taken off decisively in today's trading session. So if we see RIL closes above 3,050, that will be considered as a good breakout on the closing basis, and post that our target for Reliance Industries from a short-term point of view stands at 3,100 plus. Immediate target could be at 3,100, but position target 3,150 to 3,200. So it's a good buy, but buy in multiple tranches, as we have already seen quite a bit of spurt in 2 to 3 consecutive sessions. So at current level, given the kind of a breakout, we are slightly positive. Keep a stop loss below 2,980 rupees and buy in a staggered manner.
Okay, we leave it at that. Taking a moment to thank both our experts for joining us and taking us through their views of the markets and also giving us a handful of trading ideas. With that, it's a wrap on this edition of the FNO show, but lots more lined up on the other side. But we have the small and mid-cap show up next. Keep watching NDTV Profit.